so you never have to second-guess your price. Nobody does insurance like the Zebra. Find out how much you can save today at thezebra.com. Savings will vary, not all will save.
Talking about here. Let's take a look at some of the stocks on the move today. We can do that with Bloomberg's Carmen Reinecke, Deputy Team Leader for U.S. Equities. Carmen, what are you looking at?
Yeah, so the first one I'm looking at today is StubHub. This is ticker STUB. Shares are down about 12% right now intraday. This is the worst in about a month. So as we heard from Alexis, the company reported earnings that missed analyst expectations, especially their forecast underwhelmed. I think an interesting thing here is that analysts highlighted there was a boost from the World Cup, but still that full year forecast was lower than expected. And this also resulted in one downgrade. So Bank of America's Justin Post cut the stock to underperform from neutral and lowered his price target to $7.50 from $11.
Cerebra's taking a hit. Looking at their shares, what are they down like 12%? What's going on with them?
Yeah, so this is ticker CBRS, Cerebras. It's down about 13% right now, worst day since June. So the company also reported earnings, like 'tis the season. They projected slower growth than investors anticipated. So this is a sign the company's still in the early stages of its sort of novel chip design. It's a competitor actually to NVIDIA. Analysts sort of noted that there's potentially more of a gap between the build out that they're seeing and revenue. So this has actually been a huge sort of theme that we've seen in earnings season. Investors have really rewarded the companies that show that they're able to drive revenue from sort of the heavy capex or all the spending that they're doing on, building out AI infrastructure, producing chips, all of these things. So just seeing Cerebras sort of on the other side there.
I'll tell you, this is too soon after the IPO to miss a quarter. I told my companies, you have to give me 2 quarters of meter beat coming out of the box. This is bad. If I were the underwriter, well, actually, if I was the owner of the stock, I'd go back to the underwriter and say, what are you kidding me here? But that's just me on an IPO type situation. All right, give me one more here. Tapestry.
Who's Tapestry, TPR. So this is Kate Spade and Coach.
Oh, that's right.
Yes. So the stock here having its worst day since in a year. It's down about 15% right now. So it also had earnings. Coach was sort of the crown jewel, still leading sales for this company, but the outlook for the new fiscal year was pretty soft. So investors sort of reacting to that. It was up nearly 20% sort of since May 15th, so it could also just be sort of a buy the rumor, sell the news situation here with Tapestry.
All right, very good. Carmen Reinecke, thanks so much. Appreciate that. Carmen Reinecke, Deputy Team Leader for U.S. Equities. And for more conversations like this, subscribe to our Stock Movers Reports. Listen for 5-minute auto reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. Let's check in with Ed Ludlow. He is host of Bloomberg Tech. He's based out there in San Francisco. Ed, we got Anthropic. Now, when we talk about Anthropic, a lot of folks are saying, I want to wait and see this IPO prospectus because this could be very interesting. But they're not waiting. They're out there doing some business. Anthropic's, they're going to be buying an AI startup here. Talk to us about that.
Yeah, this is a startup called Descartes, an Israeli startup that does 2 things. They work on world models, literally AI models that try to understand the world, more rooted in real world physics. They're trained on things like video data. It's beyond text. But the second thing that they do is have a software platform that makes chips better at running AI, optimizing basically. And it seems like based on our reporting, that's the bit Anthropic's interested in. So it's a $6 billion deal we're reporting, citing sources. We don't know the structure of the deal, but in the context of what you just said, it would be Anthropic's biggest acquisition to date. And with an IPO right around the corner, it's interesting timing, but it kind of speaks to the operational or technical challenges that Anthropic still has.
Is this out of the ordinary, though, for Anthropic, though? Because they rarely make these big acquisitions. This is a big one, but they've been really spending heavily, computing power. They want to develop new products.
Yeah, I don't know. $6 billion doesn't seem very big to me when you think about the balance sheet. The way that I look at it is Anthropic's raised even this year, north of $100 billion. and most of that sits on its balance sheet. And even the money it raised prior to this year probably still sits on its balance sheet. And we are seeing valuations of very specific niches that some of these startups occupy be at that level, be high. There is a lot of activity, and the frontier labs, the hyperscalers, have used M&A to acquire those specialisms. In this case, Descartes is that software to optimize the stack and make the chip run better.
Ed, do we know anything more about a potential IPO of Anthropic, the timing thereof? I mean, we were mentioning SpaceX is now back above its IPO price. So presumably that bodes well for the tech IPO space, but anything on timing?
Yeah, I mean, the Bloomberg reporting is still that it's this fall. I mean, with respect, as a British person who's lived in the States for almost a decade, I still have no idea what the fall actually means. It seems an unspecified and infinite period of time, but that's what we've reported. I think late September or early October is what we had previously reported, and so it's kind of full steam ahead. And you make a really interesting point, which is I think I reported this at the time, right? Once the SpaceX prospectus hit, OpenAI and Anthropic had a good chance to read it and decide what to do. And whatever their psychology was behind closed doors, ultimately they both filed confidentially with the SEC, and SpaceX was led the way in that respect.
And I'm going to stick with SpaceX since you mentioned it. There was talk that actually Descartes could be acquired by SpaceX, but Elon Musk said it's not true, fake news, not happening. So why would that company be of appeal to SpaceX?
Well, perfect summary. There were reports that SpaceX had wanted to offer similarly $6 billion. I think the report was that it was an all-stock proposal, and Elon Musk said that it was fake news, as you said. Same logic as Anthropic. With the greatest respect to Descartes, and again, this is all Bloomberg's reporting, right? Anthropic has not confirmed this acquisition, nor Descartes, but their work in world models is interesting. It's not unique. There are others working in world models. The property that folks are interested in is that software that just makes the chips better from an economics perspective and operationally at running AI models. And in a world where the economics of leasing out compute capacity, running your own models on your own compute capacity is so important, and there is a supply constraint. There is not enough compute to meet the demand for running AI models. That would make that software particularly interesting, and it kind of goes back to your question on the valuation, right, and the $6 billion scale of the deal.
Ed, cost of using AI, the token costs. Users were seeing stories that CFOs and managers are saying, whoa, what are you using AI for? What am I paying for? What do we know about just the user cost experience?
Yeah, so there are two different parts to that. The cost of running a model is measured on $1 per million input tokens and $1 per million output tokens basis. And so when we get releases from, say, like Kimi K3 from China, one of the reasons that was such a big news story is that it was a high performance model, highly capable, but it was priced quite reasonably against how the absolute top US models were priced. A token spend is a budgeting issue that basically technology companies around the country, some of them have got wrong. So if you're the CFO, you have to assign a budget, right? How much money are you going to allow your engineers to spend to run AI models? And because some of these companies have consumption basis arrangements with the frontier labs, a customer of Anthropic OpenAI is consumption based, they just burn through them. And then you have to go to the CFO and go, oh, actually, I said I'd spend 10, I spent 100, and then you're in trouble.
Yep. I've done that before, and I've been on both sides of that discussion. Ed Ludlow, thanks so much. Appreciate it. Ed Ludlow, Bloomberg Tech host. He is based out there in San Francisco, right at the heart of Silicon Valley. Coming up, we're going to check in with Jim Warden. He is the CIO of the Wealth Consulting Group. We get his thoughts on these markets. With the S&P up 57 points, the Dow up 185, and NASDAQ up 250 points. That's almost 1%. This is Bloomberg.
Get rid of boring AM radio.
Your home for local stories and traffic all day.
Replace your old preset with Bloomberg 92.9.
The stories that matter.
The details you trust.
Say goodbye to useless traffic reports.
Route 1 looking good in Newbury. Mass Pike is in decent shape.
Instead, get speed, analysis, and global context on the biggest stories.
You can't get details like this anywhere else.
Your new preset on the FM dial. Bloomberg 92.9. Faster, smarter, better.
With the Bloomberg Business of Sports Report, I'm Charlie Pellett. A record-breaking price for an NBA team. Josh Kushner and former Disney CEO Bob Iger are paying $12 billion for the Lakers. Kushner is managing partner and co-founder at Thrive Capital. Iger and his wife Willow Bay previously acquired control of women's soccer team Angel City FC in 2024. Adidas's World Cup momentum has carried over to the resale market, with trade in the sports brand's apparel soaring 687% in the first half on StockX's online platform. StockX said the surge was driven by strong demand for football jerseys before and during the World Cup. More than a quarter of Gen Z investors say they see sports betting as part of their long-term financial strategy. That's according to a survey by Betterment. And that's the Bloomberg Business of Sports Report. I'm Charlie Pellett.
You know, I used to think all money managers were the same until I spoke with Fisher Investments.
Really? How different are they?
Fisher's investment counselors are dedicated to service, not sales, keeping clients up to date on their portfolio.
Well, they probably just invest in a bunch of mutual funds like I do.
Nope. They build a tailored portfolio based on their clients' personal goals, helping them stay on track for a comfortable retirement.
Well, they must make commissions selling products.
Actually, Fisher doesn't sell any commission-based products. They're a fiduciary, and they believe that's a conflict.
Then they have some kind of complex fee structure.
Nope. Fisher has a simple, transparent fee that's a percentage of their client's portfolio. So they do better when their clients do better.
It sounds like Fisher really is different.
Couldn't have said it better myself.
Fisher Investments. Clearly different wealth management. Learn more at fisherinvestments.com/different. Investing in securities involves the risk of loss.
Max Shafton here from Everybody's Business. This week on the podcast, we talk about food safety.
The food safety situation in this country has never been good. It was described to me once as a Jenga tower. And we just keep pulling blocks out. And so now it is historic in that more people have been sickened than have ever been sickened by cyclospora in this country before.
Listen to Everybody's Business from Bloomberg Business Week, wherever you get your podcasts.
Now, your 3-day weather forecast on Bloomberg 92.9.
Scattered showers and thunderstorms will be moving through, but they will taper off and end at some point this afternoon. A high of 80 to 85. It'll become clear tonight, 65 for the low. Sunny day tomorrow with highs of 80 to 85. More sunshine Saturday. Highs are around 80. Sunday, sun. It fades as clouds increase in the afternoon. 80 to 85 on Sunday. I'm Rob Carrollton with your weekend forecast on Bloomberg 92.9.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
10:21 on Wall Street. I'm Alexis Christoforous from the Bloomberg Interactive Broker Studio. We have got lots of green arrows on Wall Street this morning. Stocks are higher with the S&P 500 in record territory. This is after this morning's subdued report on wholesale inflation reinforced bets that the Fed will not be raising interest rates anytime soon. The S&P 500 up 63 points or 0.8% at 7811. Dow Jones Industrial Average up 265 points or about 0.5%. NASDAQ Composite up 254, a gain there of about 1%. And the NASDAQ 100 racing ahead 350 points or 1.1%. We do have oil moving lower this morning. Brent crude down 3% at 86.33 a barrel. WTI crude 80.50 a barrel, down 3 1/3%. Shares of Tapestry taking it on the chin this morning, down 16%. This is the parent company of Coach and Kate Spade. They posted solid quarterly results, but the annual outlook disappointed some investors. People are snapping up Birkenstocks sandals and clogs. That helped the shoe brand beat quarterly revenue estimates. It's also raising its full-year sales growth forecast. Shares of Birkenstock up 18.5%. And sorry to be the bearer of bad news, but gas prices have never been this high this late in the year. AAA says the national average for a gallon of regular is now $4.07. Diesel is at $5.40, and don't expect much relief anytime soon with wars in Iran and Ukraine stretching on. The Energy Department predicts gas prices will fall to about $3.72 a gallon by year's end. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous. That's a Bloomberg Business Flash. Back over to Paul and Lisa.
All right, Alexis, thank you so much. We appreciate that. Lisa Mateo sitting in for Scarlet Food today. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker studio in New York City, streaming live on YouTube as well. Our next guest has a passing interest in SpaceX, which I find very interesting because that's had some volatility since its IPO. But the good news for SpaceX shareholders, at $142 right now where it's trading, it is above the IPO price of $135. Jim Warden joins us here, Chief Investment Officer, the Wealth Consulting Group, joining us from Folsom, California. Jim, talk to us about your investment case for owning SpaceX here. It has had a lot of volatility since the IPO, but how are you thinking about this longer term?
Thanks for having me, Paul. Good to be with you. Yeah, so we slice and dice our portfolio in multiple ways. Most of that is multi-factor. We do have a thematic sleeve that's a smaller sleeve, and that is where SpaceX lives. It's a smaller position, to be clear, and we view this as optionality for the long term. This is not a tactical trade that we're looking to make a certain amount of money in so many months, but it's a long-term thematic play, and we believe that what they're doing with AI and Starlink and the potential for orbital data centers looks interesting, and we want to make sure that we have some exposure to that.
Well, I go from there from SpaceX. I see NVIDIA on there, but I also see Campbell's, ticker CPB. What makes you pick out Campbell's out of all these companies here? What sets it apart?
Yeah, that's a great question, Lisa. So we look at a lot of different factors. Again, we're looking at value companies, companies that fit the quality factor, momentum, low volatility. This would certainly fall in the lower volatility and value. We also look at trends. So we're a little bit different than some quant shops that just look at the four main factors. We're looking at trend, and trend looks like it could be reversing for Campbell's. And at the same time, we see free cash flows getting better. We see dividend yield around 7% and a forward PE of 10. So to the degree that we continue to have some on and off volatility, we love this position in the portfolio as a diversifier, but we think there's also some upside here. A lot of times these stocks, when they do trend reverse after hitting bottom, there's no more sellers, not a lot of sellers, and then the next investor is a buyer, and so that could be the case, we believe, for Campbell's.
Hey, Jim, just one of the aspects or one of the unique characteristics of this year's market in the S&P, the S&P equal weighted index is actually outperforming a little bit the price weighted SPX here. That's a broadening. How do you guys think about what we're seeing this year? Maybe a little bit of a broadening of performance in the market.
Yes, that's a great point, Paul. We love it. So, I mean, I'm a technician at heart as well as, a CFA, but looking at that number of companies that are outperforming their 200-day moving average, that number is real. You can look at it, the S&P 500 equal weight. You can look at the Russell 3000, and there's a lot of companies that we see bubbling up, sectors bubbling up. It's not just one sector. It's not just one style. We're seeing growth and value. And so we believe that this really just allows the markets to keep going forward. It's not just 5 names or 10 names that are doing all the work. Now, those 5 to 10 names may be contributing the most to earnings growth. and that kind of feeds into this narrative that earnings are fantastic, which they are, but some of that is related to just a few companies.
Jim, I got to ask you, because I was looking through the Wall Street Journal, and there was this article. Paul, I think you guys were mentioning it yesterday. It said investors are just keeping too much cash. Do you agree with that? I'm just trying to get an idea of what you're hearing from your clients.
Yeah, that's also a great question. So that's one of the areas where we are bullish. We look at all the headwinds, all the tailwinds, and consumer sentiment has been poor. That's usually a contrarian indicator. When people feel bad, often that's a good time to invest. Strangely, we've been in a market where, we're near all-time highs or at all-time highs, but people feel bad. So some of that could be related to politics. Another thing we look at is cash levels. Often when cash levels are really high, people also feel bad. And, that's an opportunity to invest that or to spend that. And so we believe that, as interest rates have creeped a little bit higher, we might see more of that cash get invested into bonds. Some of it goes into stocks likely, and some of it gets spent. So we believe that is bullish. Some of this money's come out, but we're still close to $8 trillion in money market fund accounts.
All right, Jim Worden, CIO at the Wealth Consulting Group. Really appreciate your time. Thanks for joining us. So we're taking it from stocks. We're going over to oil, right? We're going over commodities. This is a question for oil markets. Is the Strait of Hormuz really closed? I mean, it's a question out there. Is more oil flowing out of the Persian Gulf than we know about it? Who are we going to go to for that? We're going to go to Javier Blas. Yeah, he's Bloomberg Energy Commodities columnist for oil markets. Javier, I got to start with this. So I was reading through this article that you have. Tuesday, Energy Secretary Chris Wright, he said almost 9 million barrels a day had crossed Hormuz during the previous week. That's higher than a lot of tanker trackers' estimates. I mean, I guess that's higher than your estimates, too. I mean, what does this tell you?
Well, it is a lot higher than most people estimates. I think that the consensus probably somewhere between 4 and 5 million barrels a day, based on the available data that we have. And I think that it's very important to say that the emphasis is in available data. There is not a lot of data. A lot of the tankers are crossing the Strait of Hormuz in what we call dark. They have turned off their automatic transponders, which is a gadget that provides us where their position on the water, their longitude, latitude, speed, and heading. We can use some satellite images to figure out where those oil tankers are. But the problem is, before the war, we have access to multiple companies providing multiple satellite services over the Strait of Hormuz. Under pressure from the U.S. government, a lot of those companies have stopped providing those pictures because Washington fears that Iran was using those pictures as a source of intelligence for their attacks, for their targeting. So we are left effectively with a couple of satellites run by the European Union, which provides a single picture every 3 to 5 days. So it's not enough to have a good coverage of the region. So a lot of what is happening is going dark, and simply probably we are missing some of it. So can I believe that when the Secretary of Energy of the United States, Chris Wright, says that as much as 9 million barrels a day are crossing, I think it's possible. I think it will be foolish for us to say, no, he's lying, I don't believe it, just because the available data that we have doesn't really support what he's saying. And I think that the market is beginning to have a sense that probably more than what we think is leaving the Strait of Hormuz.
Who are these guys? Like, who are the captains? Who are the companies? Who are the insurance companies that are saying, all right, give it a shot, guys, see if you can make it through? How is that happening?
Well, a lot of it is being organized by the state-owned company, state oil company of the United Arab Emirates called ADNOC. It's a giant, not nearly as known as, say, Saudi Aramco, but a big oil company run by the Emirates, using their own tankers, using tankers that they are hiring from the market, particularly Greek ship owners, South Korean ship owner who has become a big owner of super tankers. And as it comes from the crew, all what I can say is that very brave people, because they're putting their lives at risk, very well paid. Some of the companies, for what we are hearing, are offering big bonuses for anyone willing to take the risk. But we have seen some sailors dying on attacks by Iran on oil tankers. So it is really the weight of fear. That French movie, we have a sequel recently updated. Very brave people making the runs, and obviously some people making themselves very, very rich. Iraq is offering a discount of $30 a barrel for anyone who wants to load or is willing to load his crude inside the Persian Gulf and getting it out. On a full tanker of 2 million barrels of oil, that's $60 million that you could make in 10 days.
Yeah, I want to get into the price of oil, because I'm looking at it now. I'm looking at Brent crude 86, WTI $80 a barrel. I mean, at less than 90, it's not screaming shortage.
No, I think that, usual caveats apply. This could change at any moment, but it's quite shocking to see the oil market what it is today, based on the assumptions that everyone in the industry, including myself, have made of what will happen if the Strait of Hormuz was to be closed or semi-closed and a war was raging in the region for, a couple of weeks, let alone almost 6 months that we will be by the end of this, by the end of August. So the price is not there. And I've been talking recently, using a bit of the quieter time, quote unquote, of the summer period, with a number of people that they're a bit outside the oil industry, big investors in equity markets, credit markets, sovereign debt, to get a sense of what they think. Because it's interesting, sometimes we, oil reporters or oil traders, we focus so much on oil that we lose perspective of everything else. And the sentiment that I'm getting is, so we have the largest oil supply shock in history. The story, the disruption, the Hormuz crisis that everyone said will bring the global economy down. And what we have? The global economy is doing fine.
In there. Javier,
inflation is moderate.
Javier, thanks so much for this. Got to run, but thanks for your reporting there. Javier Blas, he's a columnist covering energy and commodities markets for Bloomberg Opinion. He's based in London. He's getting the latest. Some oil is getting out of the Strait of Hormuz. It's a little bit uncertain the exact amount, but it is. Maybe that accounts for oil at $80 a barrel, WTI crude, 86 for Brent.
Faster, smarter, better. This is Boston's best source for news on the FM dial. Bloomberg 92.9. Coming up, the latest market-moving headlines from Bloomberg. First, an update from our partners at ABC News.
ABC News, I'm Sherry Preston. Wholesale inflation dropping last month as gas prices dropped ever so slightly on hopes that the war with Iran will end soon. Initial applications for state jobless benefits been creeping up again, says ABC's Jim Ryan.
The 4-week moving average of unemployment claims is still below 200,000, but the number filed last week alone rose to 209,000. Considering the job losses reflected in last month's unemployment report, analysts see the slight uptick in weekly jobless filings as a sign of relative stability in the labor market.
Treasury Secretary Scott Bessent says whoever leaked the story about the decoy plane President Trump was taken off of while leaving Turkey last month has committed treason, and that whoever it is will be found. President Trump is being sued in federal court to stop him from making money off new paid service at a social media company that lets paying customers get a first look at his posts. The plaintiffs call it a blatant corruption. Truth Social says it's a left-wing attempt to silence the president. This is ABC News.
Why wade through boring and irrelevant topics on AM radio when you can listen to Bloomberg 92.9 FM for stories that matter? Breaking global news and the context you need. Bloomberg 92.9. Faster, smarter, better.
At Franklin Templeton, we've long believed that opportunity shouldn't favor only the few. 75 years ago, that belief helped open capital markets to everyday investors. And today, it's opening a new set of doors. Access to private markets for individual investors. To explore opportunities in private credit, private equity, and private real assets, visit ftprivatemarkets.com. Again, that's ftprivatemarkets.com. All investments involve risk, including loss of principal.
This is the story of the one who keeps multiple buildings running smoothly day after day. Plumbing that flows, HVAC that hums, cleaning supplies that keep surfaces sparkling. That's why she counts on Grainger. With easy reordering online and 24/7 support, Grainger helps her keep the products she needs on hand. So shelves stay stocked and buildings stay ready. Call 1-800-GRAINGER, click Grainger.com, or just stop by. Grainger, for the ones who get it done.
Indices built to someone else's specification? That's the old way. The new way is Bloomberg Equity Indices. Design custom benchmarks and distribute them at speed. Discover evolved benchmarks for today's equity markets at Bloomberg.com/equity index licensing.
Trade election, climate, and economic outcomes with IBKR prediction markets, right alongside your stocks and options. Earn interest on your position and receive $1 per contract if you're right. Learn more at IBKR.com/predictions.
Bloomberg Radio, on demand and in your podcast feed.
On the latest edition of the Bloomberg Surveillance Podcast from the Bank of America, Francisco Blanch.
Diesel and jet fuel, we are almost there. We got a month, 2 months before we run out of rope, and
then what happens?
Yes. Well, then what we are seeing happens in a more extreme, magnified way.
It's just shown in price.
It's shown in price, and you need the demand rationing. You need a lot of volatility, Tom. That's what needs to happen. You have very sharp movements up and down in the price to force people out, or maybe to create, I don't know, Tom, maybe we had Spirit Airlines earlier in the year. Maybe we have another couple airlines.
I want to go in Madrid to the Mercamadrid effect, which is the food juggernaut that comes into Madrid. I mean, you go to the Prado, best museum in the world. Sure. We all know that. The lighting in the Metropolitan Museum of Art was copied off the Prado. Mm-hmm. That's how successful it is. Give us a granular view of diesel in Spain.
Well, so demand for diesel in Europe is taking already a bit of a hit. So it's coming down a tad. And part of it is prices have been doing their work, and it's been a strong summer from a tourism perspective, right? You have a lot of use. I mean, in Europe, diesel is an on-road fuel for cars, and you've had a lot of people on vacation. You have a lot of foreigners traveling in. Remember, in terms of tourist season, it's going to be a record tourism season for Spain and Southern Europe because there's not a lot of other places to go.
Hear the full conversation on the latest edition of the Bloomberg Surveillance Podcast. Subscribe on Apple, Spotify, and anywhere else you get your podcasts. Plus, listen anytime on the Bloomberg Business app and Bloomberg.com.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 10:40 on Wall Street. I'm Alexis Christophorus from the Bloomberg Interactive Broker Studio. We have got stocks rallying across the board after another tame inflation report has investors betting the Fed won't be raising interest rates anytime soon. The Dow Jones Industrial Average up 190 points, or 1/3%. S&P 500 in record territory, up 65 points at 7813. And we've got the NASDAQ Composite up 273 points. The NASDAQ 100, best level of the morning now, up more than 400 points, a gain of 1 1/3%. Meantime, oil is pulling back with Brent crude down 2.6% at 86.64 a barrel. We've got WTI crude down nearly 3% at just under $81 a barrel. Spot gold down about 0.7%, now trading at 43.78 the ounce. And yields are lower across the board. 2-year down 7 basis points, 4.12%. The 10-year yield is down 8 basis points at 4.61%, and the 30-year yield now down 7 basis points at 5.18%. Want to get to some stocks in the news today. Cisco is falling the most in 6 months, down 7.5% on a disappointing AI outlook. We've also got shares of Cerebras down 11% after the company projected slower growth than some investors anticipated. This is its second earnings report as a publicly traded company. And shares of Coherent down about 2% after the company reported fourth quarter results that beat the street, but analysts noted weakness in the company's industrial business. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christophorus. That's a Bloomberg Business Flash. Back to Paul and Lisa.
All right, Alexis, thank you so much. We appreciate that. Lisa Mateo sitting in for Scarlet Food today. I'm Paul Sweeney. We're live in the Bloomberg Interactive Broker Studio in New York City, streaming on YouTube.com here. Business development companies, you maybe heard of them by the acronym BDCs. They're a type of closed-end fund that provide retail investors exposure to a diversified portfolio of private companies in their earliest stage. One such company went public today on the New York Stock Exchange. That would be Robinhood Ventures Fund 2, ticker RVII. Sarah Pinto, head of Robinhood Ventures, joins us live from the NYSE. Sarah, thanks so much for joining us here. Talk to us about the IPO. Why take Robinhood Ventures Fund 2 public?
Thanks so much for having me. It's so exciting to be here today. So there's so much happening in the technology market with early stage companies, particularly now with the advent of AI, creating amazing innovation and wealth creation. And historically, that wealth creation has been incredibly hard to access for most investors, right? You have to be accredited, you have to know the right people, you have to have really high investment minimums, and then there's no liquidity once you invest in private venture funds. And so really with Robinhood Ventures Fund 2, we are bringing innovation to this market to bring early stage venture to everyone.
Well, can you give us an idea of how many private companies does include? Like what different sectors? Can you break it down for us?
Yes, of course. So we chose to focus on what we think is an N of one unique ecosystem for early stage companies, which is Y Combinator, the storied accelerator incubator based in San Francisco. They produce about 500 to 800 companies a year, and we plan to invest in about 150 companies a year. So over 3 years, this fund could have up to 400 or 500 companies, which for an early stage strategy makes a lot of sense because you want to have that diversification in order to be able to invest in some of the companies that were really early when you invested in them, but go on to be worth tens, hundreds of billions of dollars.
So 8 million shares, I guess it was a total underwriting here. What are the use of proceeds here?
So use of proceeds is really capital for the team to invest in the next generation of innovative companies, from artificial intelligence to deep tech, companies that are building in the financial sector, in healthcare, in space, and defense. And we will write checks in every single Y Combinator batch, probably about 100 or to 120 a year. And every check is in the hundreds of thousands, and so that capital will be used to make those investments that will be added to the fund.
Any investment minimums? What about fees for people who are interested?
Yes, for sure. So we decided to use a tried and true model, which is for fees, which is the venture capital model. So 2% management fee, 20% performance fee to align incentives between the managers and the investors. And it'll be, the fund size will be somewhere between $220 and $250 million, depending on the green shoe exercise.
So in the venture capital community today, Sarah, do you have to be an AI play to raise money today?
That is a very good question, and the answer is not necessarily. What you have to be is really an innovator who has a compelling story. And so what we look for is we look for these founders who are outliers, who have an amazing vision, and who will beat the odds. Because the odds for these early stage companies is probably that they won't be able to displace the incumbents. But what's amazing with being a tech investor is time and again you see companies that start out really small and go on to become the next defining company of their generation.
Well, I'm looking through your list here, and you have some pretty well-known YC alum. I'm looking at OpenAI, Stripe, like Airbnb, companies like this.
Yes, Y Combinator is an extraordinary ecosystem. They've gone on to create over $1 trillion of value, over 100 unicorns and decacorns. To your point, companies like DoorDash and Airbnb and Stripe have come out of Y Combinator. Sam Altman was deeply involved before and while he was founding OpenAI. Our first fund, Robinhood Ventures 1, has invested in companies that came out of Y Combinator or whose founders went through Y Combinator. like Boom Supersonic and Stripe and Ramp. So we're incredibly proud to be working on a fund now that is focused on that ecosystem.
So your fund IPO price $25. It's trading at $23.06 right now. How does the market typically value a structure like yours, a fund like yours?
Yes, of course. So as a manager, we will publish a NAV every single quarter, and the share price will trade based on supply and demand, sometimes at a premium, sometimes at a discount to NAV. But frankly, here at Robinhood Ventures, we're focused on creating the best possible portfolio. We control the inputs. We want to make sure that people can buy and sell every single day if they so desire. Obviously, this is a portfolio that will generate its most appreciation, in my opinion, if you buy and hold it over time. A lot of these companies will take years to become worth $1 billion plus, but it is, in my opinion, again, well worth the wait, because some of them will become, again, defining companies of the next generation.
So you're trying to bring private market access to retail investors. So I'm just curious, are companies staying private longer than maybe they used to?
Absolutely. Companies are definitely staying private longer than they used to. When I started my career, if you were worth $10 billion plus, it was standard to go public. And now look at SpaceX and Anthropic and OpenAI. We have companies that are worth close to or north of $1 trillion and are still private, which is absolutely unprecedented.
Sarah, thanks so much for joining us today. I know it's a busy day for you guys. Sarah Pinto, she's head of Robinhood Ventures down there at the NYSE. They went public today with a Robinhood Ventures Fund 2. RVII is the ticker. Again, an IPO this morning at $25, trading a little bit down here at $23 right now. So it's all a question of kind of where's the net asset value of all the companies they own based upon their analysis, and then kind of where the stock's going to trade relative to that based upon supply and demand out there from investors. So an interesting vehicle for retail investors that want to get some exposure with some liquidity to the private market space there. So interesting structure there. Looking at the markets, we got a little bit of green on the screen, and we'll take that on a summer Thursday. Coming up, we're going to check in with Woo-Jin Ho. He is Bloomberg Intelligence Senior Hardware and Networking Analyst. Cisco reported some numbers last night. We'll break it down. We're kind of winding down the end of the earnings season. We'll get some retailers. And then at the end of this month, of course, NVIDIA, they're off cycle from everybody else, about a month off cycle in reporting their numbers. So NVIDIA will be later this month. Green on the screen, looking at the bond market, there's definitely movement there. 10-year Treasury yield coming in 8 basis points, 4.61%. The 2 years in, 7 basis points, 4.12%. So maybe thinking back on that 4% watch.
Now, your 3-day weather forecast on Bloomberg 92.9.
Showers, thunderstorms tapering off and ending at some point this afternoon. High of 80 to 85, becoming clear, low of 65 in Boston tonight. It's closer to 60 in the suburbs. We'll have sunshine and lower humidity tomorrow. High of 80 to 85. Sunny Saturday with highs approaching 80. Sunday, sun will give way to clouds and highs will reach 80 to 85. I'm Rob Carrollton with your weekend forecast on Bloomberg 92.9.
Every weekday, Bloomberg brings you the best in politics twice a day.
The president spent time with the prime minister of Iraq.
Join Joe Matthew and Kaylee Lines for Balance of Power. Every weekday at noon and 5 p.m.
Washington is looking to take steps against China.
Should people start bracing for an indefinite conflict in the Middle East?
Balance of Power with Joe Matthew and Kaylee Lines.
The midterms are literally around the corner.
Weekdays at noon and 5 p.m. on Bloomberg 92.9. Context changes everything.
Data storage used to be straightforward, but AI has rewritten the rules. The data it needs to thrive is trapped in aging infrastructure. In fact, less than half of enterprises report that their data is AI ready. That makes initiatives stall before they start. Instead of fragmented systems, companies need a unified data platform, one intelligent layer that delivers data at the speed of AI, because good enough isn't good enough in the AI era. Learn more at everpuredata.com.
Veterans and active duty service members, when your call to service ends, your mission doesn't have to. Go from GI to IT in just a few months at My Computer Career. Prepare for a high-demand career in cybersecurity, protecting people, systems, and institutions from real cyber threats. Cyber warriors are needed now. Will you answer the call? Go to mycomputercareer.edu/CWP to learn more. That's mycomputercareer.edu/CWP, an elite CompTIA certification partner. VA education benefits are available to those who qualify.
Is life insurance still on your list from earlier this year? Now is the perfect time to just get it done. A buddy told me that securing life insurance sooner rather than later can help you lock in lower rates for years to come. So I added this to my list this year and got it done. I called SelectQuote and was shocked at how easy and affordable life insurance is. I'm 40 and got a $500,000 policy for $18 a month. My wife's also 40, and her $5,000 policy was only $16 a month. Plus, with SelectQuote's same-day coverage, no medical exam was required, and we were covered by the time we hung up. Checking this off my list felt great, but the peace of mind knowing my family is protected feels even better.
Call SelectQuote at 1-800-280-5858 for your free quote today. That's 1-800-280-5858. Or go to SelectQuote.com. That's 1-800-280-5858. Details on example rate at SelectQuote.com.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Lisa Mateo sitting in for Scarlett Fu today. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Brokers studio, streaming live on YouTube as well. Earnings continue to come in. Cisco last night reported some numbers. Stock's trading down 7% today, so a little bit disappointing there. But let's put in context. Year to date, stock's up 50%. And on a trailing 12-month basis, up 63%. So giving back a little bit of what had been very good gains. But let's break down the numbers from Cisco, what it means for the tech space. Woo Jin Ho, Senior Technology Analyst for Bloomberg Intelligence. He's based down there on our Princeton campus. Would you talk to us about Cisco? What did we learn with their earnings results?
Yeah, hey, Paul. So Cisco results, I mean, they're quite frankly, to put it in a nutshell, sales are white hot, right? AI close to doubling in fiscal 2027 based on their guidance. And then their core networking business, which is the basic stuff that connects all of our computers, that's going to grow at a fair double-digit pace as well. So from a demand standpoint, it's great. Cisco is the only name that's red on my screen today on the terminal. And I think people are a little bit spooked on the gross margin side for the rest of the year.
So were investors' hopes just too high, or maybe was Cisco just too conservative? I mean, what's your take?
So from a revenue standpoint, I don't think it was too high, Lisa. Quite frankly, I'm pretty pleased with the results because, like, we all knew that AI was going to be strong, and then the core networking continues to outperform. But that's the issue right there, right? You have a higher hardware mix, and hardware in the face of a memory inflation is going to put a drag on gross margins. The head fake here was that the fourth quarter gross margins was at 66%. First quarter guidance was at 66%, and all of a sudden it looks like it's going to be closer to 64 to 65% in quarters 2 to quarters 4. But at the end of the day, I think it's going to be a temporary impact, and gross margins should start to improve if we look past 27.
So what are the pressures on the gross margin here? Where's that coming from? The cost side?
Yeah, so just to pinpoint where the gross margin pressures are, they did implement some pricing increases in 2026, and that kind of diminishes going into the second half of the year. At the same time, I don't know if those future cost increases are going to keep pace with the memory increases, right? That's one. And number two, at the end of the day, they're selling a boatload of hardware, And we all know that hardware margins aren't as good as software margins. Now, I will tell you, Paul, there is some software attached related to their hardware products, but those are more on a recurring basis and not on a perpetual basis. So it will take several quarters for the software margins to catch up.
So is this restructuring to kind of move toward AI, is it the right move? Because it's putting them in a lot of competition. You have Broadcom, you have Hewlett Packard Enterprise. Is it the right move for the company?
Well, quite frankly, Lisa, I view Cisco as one of the Goldilocks of AI. It's like you don't have too much AI, and you don't have too little AI.
Just right.
Right, it's just right. So you're actually getting a fair amount of growth from AI, right? At the end of the day, like I said, the AI business is doubling. The optical business is probably going to continue to grow through 2028 and into 2030, quite frankly. And even though it might be a modest drag on gross margin over the long term, you're getting it up on better scale, right? From a competition standpoint, and you make a good point, they do have the Silicon One product that goes head-to-head to someone like Broadcom. But quite frankly, some of the hyperscalers are looking for an alternative to someone like an NVIDIA or Broadcom. And Cisco is one of the few companies that can offer that. They have the chip capacity to give it to the cloud providers. So they might be in the sweet spot of picking up a little bit of share, not too much, but a little bit of share from the bigger Silicon players.
So most of the big tech companies have reported, but we're still waiting for NVIDIA and a couple others. What's the narrative, or has the narrative changed on AI, the spend, the return? Where are we on that narrative right now, Wooj, when you talk to investors?
Look, I mean, if we look at Supermicro results yesterday, and also some of the other smaller pick and shovel guys like Lumentum and Coherent the other day, I mean, the spending on the cloud is really starting to ramp up, right? We're still in, I would say, the third inning, and 2027 is going to be the ramp up phase into 2020 as well as into 2028 as these AI infrastructure build-outs continue to keep pace. Now, where it hasn't really started to pick up, and Cisco is starting to see it, is on the corporate IT side, and that's going to be a positive read-through for someone like a Dell or HPE, which reports later in the month and early in September.
Hey, Woojin, got to ask too, at the same point, we've been hearing a lot about the AI space and what's been going on there as well. But when we start hearing about new clients, are they getting anyone anywhere, let's say, new, or what's on the horizon for the company?
Yeah, so like the sovereign space as well as the neocloud space is still relatively new for someone like Cisco, right? But again, I do think that they fulfill the sweet spot where, given their enterprise expertise, they could play a very good middleman for the neocloud guys who need a little bit more, as well as the sovereigns, who need a lot more handholding than someone like, let's just say, a Foxconn can provide. So that's where Cisco fits.
Woo Jin Ho, thanks so much. Appreciate it. As always, Woo Jin Ho is a senior technology analyst for Bloomberg Intelligence. He's based down there in Princeton. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence starts in just a moment with stocks moving higher. The S&P up 53 points, that's 0.7%. The NASDAQ up 230 points. That's about 0.9%. WTI crude oil, it's off a couple of bucks, $81 and change here. We'll have more coming up. This is Bloomberg.
This is WBOS HD1 Brookline, Boston. WNBP Newburyport. Bloomberg 92.9. Programming paid for by Bloomberg. This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals and the Bloomberg Business app.
All right, it's Lisa Mateo sitting in for Scarlett Fu. I'm Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Coming up, we're going to check in with Ira Jersey-Gate, his thoughts on where interest rates are going after the CPI and PPI data we got yesterday and today. Tom Healy, founder and CEO of Helion, the company announcing that they landed a $41 million Navy contract to power needs at data centers. Paula Cachero, Bloomberg Money reporter, on Manhattan rents hit $5,000 while listings all but vanish. I forward that to my daughter, who is always in the market, and she's not happy about that. So we'll talk about that coming up. A lot going on out there in the marketplace. Stocks are moving higher. Let's check in with Charlie Pellet in Bloomberg Business.
Hi, thank you very much. And look at that. We got the S&P above 7,800, 70.04, trading at a record, up 56 right now, up by about 0.7%. Dow Industrial is up 95, up by 0.2%. Not seeing a record in the Dow, but certainly the S&P again up 0.7%. We do have the NASDAQ Composite Index higher now by 241 points. NASDAQ up 0.9%. No stranger to seeing big moves in the stocks. The Philadelphia Semiconductor Stock Index up now by 2.1%. 2-year 4.13%. The 10-year 4.62%. This on a PPI Thursday. The 30-year 5.19%. Gold pulling back today to $43.83, down by about 0.5%. West Texas Intermediate crude down 2.3%, 81.37 a barrel on WTI. Barrel of Brent 87.12 right now, down by 2.1%. Bottom line here, we got traders pushing stocks higher. Bond yields are falling. There's more evidence of moderating inflation this morning. Reinforced bets that the Fed will hold off on raising rates next month. Jim Warden is Chief Investment Officer at Wealth Consulting Group. And right here on Bloomberg Intelligence last hour, he told us he does like what he's seeing in terms of the market broadening.
You can look at it, the S&P 500 equal weight. You can look at the Russell 3000. And there's a lot of companies that we see bubbling up, sectors bubbling up. It's not just one sector. It's not just one style. We're seeing growth and value. And so we believe that this really just allows the markets to keep going forward. It's not just 5 names or 10 names that are doing all the work.
Jim Warden of Wealth Consulting Group, interviewed right here on Bloomberg Intelligence. 2 notable exceptions to today's rally. This after earnings, we got shares of Cisco Systems down now by 7.4%, and shares of Cerebras Systems, they are plunging now after earnings, down by 13%. But again, recapping here, the big news, S&P 500 index potentially could close above 7,800, 7801 right now, at a record up 0.7%. Lisa Mateo, Paul Sweeney, I'm among friends here. That is a Bloomberg Business Flash.
Yes, you are, Charlie. Thank you so much. We appreciate it. Lisa Mateo sitting in for Scarlet Food today. I'm Paul Sweeney. We're live here in the Bloomberg Interactive Broker Studio, streaming live on YouTube. Bloomberg.com subscribers can now shape the conversation on Bloomberg Radio. Submit questions for the experts and guests on our show. Visit Bloomberg.com/AskRadio. It's an exclusive feature for Bloomberg.com subscribers and terminal clients. Visit Bloomberg.com/AskRadio to join the conversation. As Charlie was just reporting, we got green across this screen here. Let's take a look at some of the stocks on the move today. We can do that with Christine Aquino. She's a managing editor for Markets Live. She joins us here in our studio. Christine, what are you looking at?
All right, Paul, let's take a look at Cerebras. That is not green on the screen. It is very red, actually. Ticker CBRS. And those shares are down almost 13%. So it's the AI infrastructure company, a lot of potential with the data center build out, but it's just the revenue guidance for the current quarter was disappointing. About $215 million. It was lower than some estimates, but higher than others. But, that was just enough to be disappointing for investors in general. Now, the other interesting thing about their earnings is the fact that their cloud division revenue quadrupled to $127.7 million. That was actually more than the hardware business, which sells computers outfitted with its chips, and that's meant to be its flagship business. So the fact that, the company positioned itself as a challenger to NVIDIA when it comes to AI chips, but then its cloud division is actually driving revenue, that's kind of causing some concern among investors, and thus the decline in shares today.
And also decline in StubHub. I mean, I go in there to get my daughter these concert tickets that are out of this world and ridiculous. But their shares are taking a hit.
Absolutely, Lisa. Maybe you should be buying more concert tickets then. But, their shares not doing so well as the ticker STUB. They're down more than 13%. That's actually the biggest drop since February. And that's precisely because of their earnings that was just not up to snuff when it comes to estimates. Second quarter EPS missing that that. Their forecast was also underwhelming. And analysts noted that, there was an expected lift from the World Cup, but that also was disappointing. And so Bloomberg Intelligence analyst Kevin Neer is saying that, looking at the full year gross merchandise sales, that's another area of disappointment, also suggesting a slowdown in the second half. And then, of course, costs. Their operating costs surged 36%, which was more than the revenue gain anticipated of about 33%. So overall, not a good look for StubHub here.
One more. What do you got?
Let's talk about Birkenstock. That is green and screen. So ticker BIRK. Those shares are up about 17%, more than 17%. So that's the biggest gain in 3 months. They boosted their full year forecast. They're now expecting revenue growth of 15% on a constant currency basis. They're also reporting adjusted gross profit margins of 59.2%. And the company said actually those margins would have been much bigger had it not been for currency swings and tariffs. And, they've also benefited from primarily the growing demand for their closed-toe sneakers, boots, clogs, and slippers. And those tend to be more expensive than the classic sandals. I'm not a fan of the sandals, to be honest. Like open-toed shoes in New York City, just not for me, So I might go for the closed-toed options.
They're comfortable, but not the best. I don't know. I'm not a fan either.
Doesn't work.
It doesn't work.
It's a little dirty in the city.
Yeah.
So, all right, Christine, thank you so much. We appreciate that. For more conversations like this, subscribe to our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. We had some inflation data today on the producer price side, a little bit moderate relative to expectations. Similarly for the CPI yesterday, we're seeing the rates back up here. 10-year Treasury down 7 basis points. On the yield side, 4.62 is the yield. Ira Jersey joins us, Bloomberg Intelligence Chief U.S. Interest Rate Strategist. All right, Ira, we've had a couple days of inflation data. What do you make of it? What do you think the market makes of it?
Yeah, well, the market certainly liked some of the internals of today's PPI report. And when you strip out the components that go into the PCE deflator that we're going to get later this month, which of course is, at least at the moment, the Fed's preferred measure of inflation, it seems like we're going to get somewhat lower than people were maybe expecting. And that's the reason why you're getting this rally throughout the entire yield curve today. Just on the expectation that, hey, maybe the Fed's not going to have to hike as aggressively in order to get inflation down.
Well, you mentioned that. So is it giving Kevin Warsh kind of some breathing room, but is it enough to justify, let's say, a rate cut or just stay on hold?
I think it's not quite there yet, right? You're still running with CPI at 3.4%, and the PC deflator is going to be, still kind of at or above just 3% on a year-on-year basis. So at least they need a few more prints, and it looks to before the Federal Reserve will make a final decision as to whether or not it can actually cut, right? I don't think they're going to move at all this year. Now, next year is a much different story, though, because the market is actually pricing for year-on-year measures of inflation and CPI in particular, because that's what the market uses as its benchmark for the traded instruments like the Treasury inflation protection securities and the like. Actually, you're going to have inflation that's going to be 2% or below, according to a lot of what the market's pricing right now. So if that were to occur and you continue to have a weak job market, that's where, Donald Trump might actually get his wish and the Federal Reserve could cut interest rates. So inflation, is the market telling us that we don't have to worry about it so much here? I mean, I see rates higher here. I mean, I thought we were going to stay in 3.75 to 4.5 on the 10-year, but here we are at 4.60 and change. Yeah, so the long end of the yield curve is really thinking more about supply concerns. You still have pretty high deficits, right? With that deficit to GDP of around 6%. People are going to be worried about the long-term health of the U.S. economy. Plus, if the Federal Reserve does actually cut interest rates, you're going to potentially have somewhat higher inflation longer term. So 4.5% is probably a decent steady state, quite frankly, I think. And our call going into this year, and this really hasn't changed very much, that we're going to end up at around between 4.25 and 4.75 on the 10-year yield. It's that 2-year yield that really is driving interest interest rates throughout the whole curve, and the shape of that yield curve. So, Paul, you always talk about the 2-year, 10-year yield curve to us. That has flattened quite a lot because the market is still pricing the Fed to hike interest rates. So until that, it's obvious that the market is that the Fed's not going to actually hike. The curve is probably going to stay a little bit flatter than it should, and you still have that 4.15 to or above 2-year yield. Now, I think ultimately that will come down, but it's going to take a little bit of time to convince the market that inflation's not a more medium-term problem.
And I read the 30-year bond sale this afternoon. I mean, I'm looking at the notes, expected to price at the highest financing rate in 25 years. What are you expecting?
Yeah. So it is going to come out at the highest level in quite some time, like 5% coupon. You haven't seen that. I can't say you haven't seen it in my career because I started a very long time ago. Demand has been okay, actually, at these auctions. So when you look at the 10-year auction yesterday, demand was good. The 3-year auction on Tuesday, demand was good. Now, the 30-year is a lot more market risk. So the question is, will we see significant demand at this auction, and will it prove the price level? Is this the right level where the market wants to be? Now, I actually think it will. I think that demand will be fine. You're at this point where liability-driven investors, so insurance companies, pension funds, and others who have very long-term liabilities, they like yields above 5%. So I suspect that some of them will kind of bargain hunt here a little bit and go into treasuries where you have more liquidity and theoretically a little bit less credit risk than buying a lot of the long-term paper that's come out of the investment-grade corporate market recently.
All right, Ira Jersey, wish we had more time with you. He's from Bloomberg Intelligence, Chief U.S. Interest Rate Strategist. Always appreciate his time. So, Paul, we talk a lot about AI, right?
Yep.
So what do you need? More data centers, right?
Right.
You need more data centers. What do you need?
Power.
Yes. But the problem, utilities are stretched, right? A lot of companies are realizing they have to find another alternative. So that is where our next guest comes in. We're talking to Thomas Healy. He is founder and CEO at Hyliion. Thomas, thanks so much for joining us. First of all, explain what Hyliion is and how does it's portable power technology, correct?
It is. So it's a power module that gets deployed at your facility, and it makes all the electricity you need so you can remove your dependency from the grid. Now, this is a state-of-the-art technology. You can feed it natural gas, diesel, hydrogen, propane, and it will make electricity at near power plant level performance, but out of a small modular box that can go right at the facility.
So you guys recently came up with a contract with the United States Navy. Talk to us about that.
Yeah. So I'd say there's two major driving forces behind our technology, demand-wise. So one is data centers, as we just discussed. The second is the military. So we actually started deploying systems with the military last year. The initial focus is for these unmanned autonomous ships. The reason they need a new power solution is there's no one on board to do maintenance of the standard diesel engine anymore. And so they need a new technology like ours to power these ships for much longer time. And then we just announced this $42 million Navy contract, which goes beyond autonomous ships, and it actually looks at powering military bases and then also larger ships as well.
Autonomous ships. So there's no one. Boy, that's blowing my mind. Got to ask you a question, Thomas. So can you make electricity for less than you can buy it on the grid?
That is the target, yes. And that's really the big unlock. This is the breakthrough is, why haven't we made our own electricity before, just like you make your own air conditioning at a facility? It's because there hasn't been an economical way to do it. This technology actually enables it where if you tap into your natural gas pipeline, in most instances, we can actually make electricity cheaper than grid electricity. I'll give you an example. We're working with a box retailer in New York. Their grid cost is 22 cents per kilowatt hour. We're targeting being able to produce electricity at 17 cents per kilowatt hour.
Wow. So talk to us about kind of how you guys frame out these data center AI opportunities for your company, because again, we, as Lisa mentioned, we know that a lot of the AI folks talk about power and water, but certainly power, electricity being a gating issue here.
Yeah, so I'll frame up the problem, right? 18 months ago, we were talking about how can we get more chips and bring them online. The chip bottleneck, we've gotten through that. Now the bottleneck is power. And we're actually to a point where there are warehouses full of chips that just don't have access to power yet. And so, as you mentioned, utilities are saying, we're tapped out. We don't have electricity available to give these data centers. And so it's causing them to have to bring their own electricity to come up with a way to make power on site. And that's what we're unlocking with this technology. Now, there are other options, right? You can look at on-site turbines, internal combustion engines, but we're bringing forward what we believe is the better mousetrap, the better way to do it, where you're getting that power plant level performance, but you're doing it in a way where you actually can make it right on site.
Thomas, how did the company get to where it is now? Because I was reading through and it said you were once an electric vehicle company. Is that correct?
It's been a journey. So I founded this out of my dorm room at Carnegie Mellon about 11 years ago. And you're right. The initial vision was electrify commercial vehicles. We went public in 2020 on that business model. And then we actually acquired this power generation technology out of GE Aerospace. We initially viewed it as a tech that we were going to use to charge these electric semi-trucks. Unfortunately, the EV space has gone through a downturn. And so we actually moved out of that space and decided, let's go all in on power gen. We were already working with the military. And then this pull that we're seeing from the data center space, it's unbelievable. I mean, these companies are talking about needing hundreds of megawatts, gigawatts worth of power. I'll give you a stat. One of the hyperscalers is projecting that over the next 5 years, they're going to go from 6 gigawatts of power to 40 gigawatts of power. That's just in 5 years.
Yeah, and the good news is after a rocky start, your stock is finally starting to be rewarded. And we see the stock just performing really well over the year to date. It is up 135%, and on a trailing 12-month basis, up 160%. So catching that tailwind there. Thomas Healy, thanks so much for joining us, talking about pivoting your company. He's done it very successfully here. Thomas Healy, founder and CEO of Hyliion. He joining us from Austin, Texas. Down there. S&P up 46 points, but the Dow turning a little bit negative here, down 27 points. The NASDAQ holding on to the gains of up 215 points. Coming up, we're going to check in with Paulina Pachero, Bloomberg money reporter, on Manhattan rents. Guess what? They continue to go higher. $5,000 is the median. Are you kidding me? More to come. This is Bloomberg. Good morning.
Bloomberg This Weekend. News, politics, and the lighter side of Bloomberg.
What's better on a warm day? Some ice cream, maybe?
Sure.
Okay. How about ice cream dipped in butter?
Butter.
For $9.50 a cone.
And then another treat that I get is the vanilla ice cream with olive oil.
That I can get down with. So butter, why not then?
Why not? If asked, I will try it.
Bloomberg This Weekend. Saturdays and Sundays on Bloomberg 92.9, Bloomberg Television, and the Bloomberg Business app.
Are you a business owner, CEO, or CFO running a successful mid-sized business and looking for tax reduction strategies, proactive CFO, and transaction advisory services from a highly experienced team? Then visit NeilJasani.com. That is NeilJesani.com. Or call 1-800-971-1124. We are a new generation national tax and accounting firm serving only mid-sized businesses and ultra-high-income households. Don't pay what you don't owe. Visit NeilJasani.com.
Don't wait for headlines. Watch the news unfold in real time at Bloomberg's New Economy Forum, live from New Delhi, October 13th through the 15th, as global leaders come together to tackle the biggest issues shaping our future, from geopolitics and global trade to technology and the world's new balance of power. You'll have a front row seat to the conversations that matter most. Watch live at BloombergNewEconomy.com. That's BloombergNewEconomy.com.
Someone had a birthday.
Yep, 50. Can't believe it.
50 years of wisdom.
Great segue. We have a health reminder from the CDC.
Pneumococcal vaccination is recommended for adults 50 or older. Says here, we're over 6 times more likely to be hospitalized with pneumococcal pneumonia than adults under 50.
I don't love those odds.
Same. Look what I found. Pfizer's Prevnar 20 is proven to help protect adults against pneumococcal pneumonia and invasive pneumococcal disease in just 1 dose, and millions have already gotten it.
Continued approval may depend on a supportive study.
Don't get Prevnar 20 if you have a severe allergy to its ingredients. A weakened immune system may lower your response. Common side effects include injection site pain and swelling, fatigue, headache, muscle, and joint pain. For full prescribing information, please call 1-855-213-2138. Visit Prevnar20.com or talk to your doctor or pharmacist.
I'm on Prevnar20.com now, scheduling my appointment.
Good idea. And happy 50th.
Want to understand what's really driving Australia's economy?
The RBA are still alert to inflation risk. China-Australia relations have been deteriorating.
The ongoing discussion over the rising cost of everything.
Listen to the Bloomberg Australia podcast, winner of the 2026 Australian Audio Award for Best Money and Business Podcast. Each week, we bring you smart conversations with leaders in business and our journalists here and around the globe. Subscribe to the Bloomberg Australia podcast wherever you listen.
Now, your 3-day weather forecast on Bloomberg 92.9.
Few more showers and thunderstorms possible today, but they will eventually come to an end at some point this afternoon. 80 to 85, clearing and 65 overnight. Sunny, 80 to 85 for tomorrow. The sunny weather continues on Saturday. It's comfortable. Highs are near 80. Sunday, morning sunshine, increasing cloudiness in the afternoon and 80 to 85. I'm Rob Carolyn with your weekend forecast on Bloomberg 92.9.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:21 on Wall Street. We do check markets all day long here at Bloomberg. The Dow lower, S&P, NASDAQ both higher. S&P at a record. This Bloomberg Business Flash is brought to you by Golden Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. To get a free gold and silver info guide and learn how to add metals to your IRA or 401k, tax and penalty free, go to goldencrestmetals.com/guide, goldencrestmetals.com/guide. We are looking at a down day now for the Dow Jones Industrial Average, giving up earlier gains. The Dow slumping by 57, down 0.1%. S&P had been above 7,800. Right now it's 77.93. That would be good enough, though, for a new record. Up 44 right now, up by about 0.6%. Bond yields are falling as more evidence of moderating inflation reinforces bets that the Fed will refrain from raising rates next month. Right now we have got the 2-year 4.13% with the 10-year 4.63%, the 30-year 5.20%. Gold down $39 the ounce to $43.69, down by about 0.9%. West Texas Intermediate crude down 1.3%, $82.19 a barrel. Barrel of Brent $87.96, lower now by 1.1%. An almost 3-year strike against Tesla in Sweden has been called off, with the IF Metall labor union saying the carmaker, quote, bought out the remaining workers taking part in the protest. Tesla shares up now by 2.2%. Also, we are looking at shares of SpaceX continuing to hold above their IPO price. SpaceX today is lower, down now by 3.4%. Again, recapping here, S&P 500 index higher by 0.6%. Dow in the red, being led lower by Cisco, 3M, and Boeing. Lisa and Paul, that is a Bloomberg Business Flash.
All right. Thank you very much, Charlie Pellet. So I live in New Jersey, right? So I rent in New Jersey.
Okay.
But rent in New York City, it's out of control. That's what I hear.
But right now we're going to talk to Tiffany McGee.
Whoa.
Yes,
Okay.
we're going to switch gears on. We switched up the whole. All right. So. Okay, very good. So we're switching things up again. So you were right. Go ahead.
We're going back to Paulina. She made it. Paulina for the save. So we're talking about rent. So it's a lot of money. How much are we talking about? We're talking $5,000, which seems out of control and out of touch. Paulina Cachera, she is Bloomberg Money reporter. We want to bring her in to talk about her latest piece. Paulina, this is ridiculous. The jump in rent. At the same time, supply, though. So if you can break that down for us.
Yeah, so in June, we saw that Manhattan rents, as you mentioned, reached a record high of $5,000. At the same time, we also saw inventory plunge 39% compared to the last July. A lot of that is a result of different things we're seeing in the market. One is last year, New York City passed the FAIR Act, which barred landlords who hired agents from forcing tenants to pay the broker's fee. It was very commonplace for people to have to pay a 15% broker fee whether or not they hired that agent themselves. As a result, we've seen brokers look for a workaround to try and get tenants to continue to pay their broker's fees. What they've done is they, build relationships with landlords, and they are actually holding more listings off market. So that's part of what we're seeing contribute to this steep plunge in inventory in the market. And so for those who are looking at apartments that are publicly listed, the prices for those apartments are going up. There's more competition, and bidding wars are breaking out over 1 out of 4 apartments rented in New York.
Wasn't Mayor Mondami supposed to bring rents down?
So the Rent Guidelines Board did vote to freeze rent, but that only applies to the city's rent-stabilized apartments, which do make up a significant swath of the apartments. But for everyone who is getting a market rate apartment, they can still face large increases in rent.
So then what solutions are being tossed around? Is there anything that can fix this problem?
I think one of the big things that, the city has been working on is building more housing. They passed the sweeping zoning changes to kind of accelerate housing. They passed property tax abatements to encourage developers to continue to build more housing. But I think we're in such an acute supply shortage in New York City that it's still not keeping up with the demand that we're seeing in the city, especially during the summer months, which is, a time when new grads and college students come back to the city and are looking for apartments. And it's when a lot of leases turn over. So it's just been a really crazy frenzy for those that have been searching for an apartment this summer.
So talk to us about those broker's fees, $4,000. I was recently quoted by someone. How does that part of the market work?
So, historically, as I mentioned, brokers used to charge 15% of, whatever the annual fee was to tenants. The law now forces whoever hires the broker to pay that fee. Okay. We are seeing fewer tenants pay for broker's fee. Before the law was enacted, about 31% of renters paid a broker's fee, and since then that's dropped to 15%. So for all intents and purposes, a lot of people aren't, but in a market that is so competitive and that's so tight, I think the allure of being able to get access to this trove of off-market listings that only people who are able and willing to pay get access to is really appealing. You don't have to deal with open houses with 50 or more people cramped in a small studio. You're not having to bid over asking. It kind of gives you what some brokers are calling a pre-market advantage, and you don't have to deal with the competition.
So is this craziness, like these prices, is it just across New York City? I mean, let's say Upper West Side versus Upper East Side, or, does it vary from community to community? Where are we seeing the highest?
So, I think obviously the most desirable neighborhoods that have long been desirable are still very much, if you're looking in the West Village, you're going to deal with a lot of competition. Anywhere in Lower Manhattan, parts of Brooklyn like Williamsburg and downtown Brooklyn and Brooklyn Heights have becoming really hot markets as well. So areas that are really desirable, you're going to face more competition. But I will say that we did see the trend of rents rising and inventory dropping in both Manhattan and Brooklyn. So we're seeing it across the market.
All right. Offspring number 1B, just a coincidence. I got the email today. Can you pay for a broker? I said, sure. There you go.
There you go.
There you go. Paula, Paulina, thank you so much. We appreciate it. Paulina Cachero, Bloomberg Money Reporter, talking about those. I've been in the city for 40 years. If they go up crazy every single year, nothing changes.
So it's not a news story.
It's a little rock. It's a little rock.
Yeah.
You go to Port Authority, people are streaming in every single day into this town. Nothing's changed. Let's switch back to these markets. We've got some red and green on the screen here. Tiffany McGee joins us here, CEO and CIO of Pivotal Advisors. Tiffany, you've had a good performance in the markets this year. I'd love to get your thoughts on the markets. This seems to be pretty healthy in the sense that it's driven by real earnings growth out there.
Absolutely. I mean, when we think about all the things kind of that can be affecting the market, political policy, inflation, all of those things, this market, we're at record highs and it just kind of keeps climbing.
With that said, I want to take you to some individual stock ideas. So I'm looking through your list. Okay, so Caterpillar, CAT, that one kind of stands out to me. Why is that on your list? Big company.
Yes, absolutely. And so, this is actually one of my favorite stocks to talk about. So everyone's talking about AI, and we are, all in on AI, and we'd like a diversified portfolio, almost like a mini portfolio of AI. And so people don't immediately think Caterpillar when they think about AI. And so, AI doesn't live in the cloud. It lives in this enormous, physical buildings that, really kind of consume a lot of this energy, right? And so Caterpillar is really compelling because it really allows participation in AI infrastructure. And it creates kind of like this demand for generators and turbines and equipment for the support for the support for the data centers.
Oh, I forgot about that.
Yeah,
side of it.
so it's kind of like the unusual suspects, right? So outside of your Microsofts, Nvidias, all of that, what is who is building that infrastructure?
So it's interesting. Is this for a derivative play? A lot of investors are looking for derivative plays for AI. So, and they're thinking picks and shovels in addition to the chip manufacturers. Schneider Electric, it's a French company. Talk to us about that.
Yeah, so again, these data centers require a huge amount of power to kind of make them go. And so Schneider Electric is a global leader in energy management, electrification. And so that's why we like it. And so it's really, and not just in France, globally. So it's really kind of participating in that AI spend.
Where are you finding value outside of the AI space?
Yeah, so technology in general, but then also we like financials. And again, how we manage things is we typically manage our clients' entire portfolio. We do so with institutions, and so we like to take a cord and satellite approach. But in these themes we're leaning into, we like to diversify. So on financials, which is an area that we like JP, we like Goldman for their diversified business model. But then we also like to add something like a KKR or an Apollo that really allows retail investors to kind of participate in private market revenue without having to actually participate in private markets. So it kind of rounds out that portion of the portfolio.
What are you guys doing in fixed income market these days? Because I can clip some very nice coupons these days.
You can. I think for the first time in a long time, fixed income is really kind of doing its job, which we love. And so when we think about how we kind of construct the fixed income portion of our portfolio, we still like a core and satellite. So we like to do so with funds, right? We don't really want to kind of bet on, the yield curve. So we're taking short, middle, and long, and then we're also kind of layering that in. We like to run a core plus strategy, so traditional kind of Barclays Ag, but then kind of adding a little bit of high yield, a little bit of opportunistic credit.
Bloomberg Ag.
Oh. You know what? You are correct. I'm showing my old school. Listen, I started at Merrill Lynch so long ago.
But I think
you are correct.
I think I saw Mike walking down the hallway. I said, wait.
I am in the Bloomberg building. The Bloomberg Ag. Yes. Thank you for that correction.
So that works. I mean, it's
so good.
You can just clip coupons this year. I see how high yield and leverage loans are actually the best performing fixed income space here. But I'm like, do I have to take that credit risk here?
So you don't. And I think it's really important to think about, what are you investing for and what's your time horizon? So our clients, our institutions, it's always long term. But to your point, you don't necessarily have to do that right now, right? And of course, bonds are always are really right now a good diversifier to equities in a way that I don't think that they have been in a while.
All right, Tiffany, thank you so much for joining us. We really appreciate you coming into our studio. Tiffany McGee, she's the CEO and CIO at Pivotal Advisors. Again, here, the market's kind of mixed here. We got the Dow kind of moving down a little bit, but the S&P kind of holding on to those gains. And I'm keeping an eye on oil. We're coming off of those lows here. We were off about 3 or 4% here now, only off less than 1%. So oil kind of coming back here, and it just kind of goes to the rhetoric of what's out there, and that rhetoric changes many times throughout the day. So now we're hearing some little bit tougher talk out of that part of the world. We're seeing that directly in WTI crude oil, now down 76 cents, $82. So that was the play there. Coming up, we're going to be taking a look at some more of these markets here. Again, we had the inflation data today on the producer side, a little bit more benign as well. which kind of confirms what we saw yesterday on the consumer side of the business. So inflation, it's there. We see it in higher prices, but maybe we've peaked a little bit. That's what some folks are saying, maybe coming down. So the question is, what will Fed Chair Warsh do? We'll have more coming up. This is Bloomberg. Good morning.
Speed, analysis, context. This is Boston's best source for news on the FM dial. Bloomberg 92.9. Coming up, the latest market-moving headlines from Bloomberg. First, an update from our partners at ABC News.
ABC News, I'm Sherry Preston. Oklahoma has put a man to death for killing his girlfriend in 2005. It is the first of 3 executions set for the same day across the country today. Executions also set for Alabama and Tennessee. Concern for U.S. sailors deployed to the Middle East 9 months into their mission. The Navy Times and Stars and Stripes reporting that multiple service members have tried to jump overboard after describing moldy showers, broken toilets, and a lack of hygiene products. ABC News contributor Mick Mulroy.
It really set a record for continuous days at sea, so without a port call. And that causes a lot of the issues, of course, because supplies run very short and days become essentially continuous. But it's important also to point out that this crew has done an exceptional job at carrying out the mission.
More strong thunderstorms in the Midwest. Nearly 9 feet of rain fell in areas east of Indianapolis. This is ABC News.
The news doesn't stop on the weekends, and now neither do we. This is Lisa Mateo. Join us on Bloomberg this weekend. Watch and listen to the new show Saturdays and Sundays starting at 7 a.m. on Bloomberg Radio, TV, and the Bloomberg Business app. Join us for Bloomberg Power Players on September 10th in New York. Set against the backdrop of the U.S. Open Tennis Championships, Bloomberg convenes the leaders shaping the future of sports business. From athletes and team owners to commissioners and investors, hear the market-moving conversations driving the multi-trillion-dollar sports economy. Register now at BloombergLive.com/PowerPlayersRadio. That's BloombergLive.com/PowerPlayersRadio.
Trade your portfolio with the power of prediction market probabilities. With Interactive Brokers, trade prediction markets on election, climate, and economic outcomes, right alongside stocks, options, and bonds. Prediction market prices reflect probability, and correct predictions receive $1 per contract. Plus, earn interest on your position. Prediction contracts are not suitable for all investors. Visit ibkr.com/predictions.
Workdays work better with food, and not just any food, the good stuff. That's why there's Easy Cater, the workplace food platform where you can order from a huge variety of great restaurants for any group size, anytime, anywhere, all in one place. Whether it's gourmet deli trays for the client meeting, spicy noodles for the night shift, tacos for the weekend crew, or a big box of brownies to tell your team, thank you. Just use Easy Cater, one platform to feed them all, and feed them well. Start an order at easycater.com.
Bloomberg Radio, on demand and in your podcast feed.
On the latest edition of the Bloomberg Daybreak U.S. Edition podcast, Bloomberg's owner Aunt joined us from Dubai with a look at the impact of mounting U.S. economic pressure on Iran.
The realistic answer to that question, Nathan, is that yes, the economic pressure is far greater than what it was, especially when compared to pre-war era, and it is taking a toll on Iran, combined with the damage from the war on their infrastructure. We're seeing a spike in inflation and a depreciation in the Iranian currency. But is it enough to cause a kind of shift in popular sentiment that Trump is probably hoping to see in a short period of time? I highly doubt it. Iranians did take the streets late last year and earlier this year, but that met police crackdown, and that resulted in the death of thousands of people. So it's really difficult to see repeats of the same thing. We haven't seen any indication of popular discontent since the war began, both because of the possible police brutality earlier this year, and also because of the fact that wars do tend to basically rally people around the flag. And I think we're seeing some of that as well.
If we see even further economic pressure, could that start to blow back on the U.S.?
Well, the economic pressure is mainly reinforced by the U.S. blockade, which is now at the heart of the current impasse that is holding up the negotiations between the U.S. and Iran. And it is taking a huge toll on the global economy, which will obviously find its way back on the American economy as well. But also there is a more direct impact, which we are seeing both on gasoline prices in the U.S.
Hear the full conversation on the latest edition of the Bloomberg Daybreak U.S. Edition podcast. Subscribe on Apple, Spotify, and anywhere else you get your podcasts. Plus, listen anytime on the Bloomberg Business app and Bloomberg.com. Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:40 on Wall Street. We do check markets all day long here at Bloomberg. We've got the Dow lower now, the S&P well off session highs, still holding on to a gain, still at a record. NASDAQ, the NASDAQ 100 index, both pushing higher. NASDAQ 100 index, want to begin there. It is outperforming, surging now by 1% today. NASDAQ up 0.6%, keeping it all in context. S&P up 33 for the S&P 500 index. That is a gain right now of just about 0.4%. The Dow, though, in the red. Dow Industrial slumping by 86 points, down by 0.2%, certainly weighing on the Dow today. Shares of Cisco Systems, Cisco after earnings, down by 8.6%. We've got the 2-year on this CPI, on this PPI Thursday, CPI yesterday, 2-year at 4.14%, the 10-year 4.63%, the 30-year 5.20%. Spot gold right now at $43.70 the ounce, down by about 0.9%. West Texas Intermediate crude seeing a drop there of 1.4%. WTI 82.11 a barrel. Brent 87.85 down by 1.3%. I'm continuing to keep an eye on shares of SpaceX. Right now we got SpaceX lower by just about 3%. However, it is still above its IPO price, $141.79. Went out the gate last month at $135. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hi, Charlie Pellet. Thank you so much. We appreciate that. We got Lise Mateo sitting in for Scarlett Fu here today. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. Coming up in just moments, we're going to listen into a conversation Ed Ludlow, Bloomberg Tech Anchors, is going to have with Andrew Feldman, Cerebras CEO. They reported numbers last night. Street a little disappointed. I would say the least. Stock's down 13% here today. This is a chip maker, and you don't expect the chip makers to put up weaker than expected numbers. I'll tell you, before we get to that, this Mark Walters story is just fascinating. This is the dude who sold the Lakers like yesterday, right? Yeah. After buying it less than a year ago. And now we know that he has to raise cash because part of his financial holdings are an insurance company. And that insurance company, or companies plural, have had some regulatory oversight concerns regarding some intercompany loans, which apparently is fairly typical in the insurance industry. But the net of it all, he has to raise cash.
Of course.
And so you sell the Lakers if you got them. Now the news just crossed that he has pledged his stake in Guggenheim, which is a big financial asset management firm, as collateral to quickly secure loans here. I mean, and I'll tell you what, folks, Guggenheim is a huge asset management firm, $320 billion under management.
So not the museum.
No, this is not. This is the $320 billion asset management thing. So we'll stay on top of this story. Right now, let's go to Bloomberg Tech anchor Ed Ludlow. He's speaking with Andrew Feldman, Cerebras CEO. Let's listen in.
Since the last week of June, Cerebras CEO Andrew Feldman joins us now. The first thing that I learned was there is a business renting out compute capacity that's still there. Could you give me a backstory on that, Andrew?
Oh, of course. There's a huge business of renting out compute capacity. I think it's what the neoclouds do. It's what the hyperscalers do. It's a very profitable business.
And is it outpacing the growth from the business of selling the hardware direct to others?
Well, we have two parts of our business. We have a first-party cloud. That means we design, manufacture, and deploy equipment in our own data centers, and we rent it out to our customers. That part of the business was up 281% year over year. Huge growth, huge growth. Now, in that part of the business, we control the data centers. There's another part of our business where we sell our AI hardware to customers who want to do the exact same thing, who want to deploy the equipment and either use it for themselves or break it up into little pieces and sell the compute to various customers, right? Those customers, we call that our hardware business. We're selling hardware for their premise. And in Q2, some of our customers didn't have data centers available, so we were able to deliver less to them. And so right now, data centers are a challenge for everybody. We had some. We were able to deploy them for our own use and for the use of our cloud customers, our first-party cloud customers. And so that business is absolutely ripping.
We're live on Bloomberg Television and Radio with Cerebras CEO Andrew Feldman. And the reason I asked for the backstory on that is that cloud business was born out of needing to build data center capacity to test the technology worked. It seems to be working.
It was. You know, we wanted to be able to provide demonstrations to customers without having to move hardware to their facilities. We didn't have a hyperscale customer at that time, and so there was a need to find a way to deliver compute services to people who didn't have a data center, didn't have a way to otherwise enjoy our blisteringly fast AI hardware. And so we set it up at first for ourselves and then for demonstrations, and there was so much demand on it over time that it's become a big business for us. And last quarter, Q2, it was an extraordinary business for us. And we expect it to continue to grow at tremendous rate. Now, even though now we have hyperscale customers like AWS, now that we have frontier labs like OpenAI, that business continues to grow at exceptional rates.
Okay, the hardware business, there is some confusion out there. You report on a core basis, which showed that the hardware division was up, right? On a GAAP or non-core basis, it would be otherwise. Just explain the story for the hardware business.
The story is one of our large hardware customers had some warrants, and those warrants are subtracted from revenue. The value of those warrants are subtracted from revenue in GAAP accounting. And so it made the numbers look a little smaller than they were actually.
Demand is great. It's there. There is a backlog. We know about
ripping, Ed. We've got 25.4 billion in backlog.
So here is the data that people are really searching for with Cerebras, which is how can you get the capacity in place faster, both on your own data centers or to get the hardware into the hands of customers for theirs?
Right. And that's a fair question. What we said on our call yesterday is that we had signed up or had already live 600 megawatts of capacity, and that we had a pipeline of gigawatts of additional capacity. And what we said was that we expect our revenue to more than triple next year. And so I think we have been executing at a tremendous rate. You know, adding 600 megawatts in several months, 6 or 7 months is no small feat. And we will add vastly more in the months to come. And so I think we are ahead of plan. We beat guidance and we beat consensus on the things on our core business, on core revenue, core gross margins, and beat by a lot on core operating margins. And then we guided a big raise, so for 2027 and 28. So we feel really good about the business and are proud of last quarter's results.
Andrew, what are the biggest factors on the supply chain side or on the operations side that are impacting your ability to deploy that capacity?
So there are several things you need to do on the supply chain, right? First, we just talked about data centers. You need a place to put your equipment so you can build the cloud so that you can deliver to your customers. Walking back upstream, You need manufacturing capacity, and we've expanded our capacity by partnering with Flextronics and Sanmina and Rocket EMS. We will this year increase manufacturing capacity by more than 10x. Walking further back upstream, you have to work with your fab partner. Our partner is TSMC, and they have assured us supply that will support our growth. And so we've systematically worked each of these components in a field we call capacity to have more chips, more manufacturing capacity, more data centers to put these chips to build the cloud offering.
The stock's down 14% right now as you and I are talking. You know, since the IPO, it's performed. I think the stock was up 42% from yesterday's close. Is lockup expiry a factor here? You know, we talked earlier in the program about SpaceX's lockup and the mechanics of that. Would you say that you see an impact of that in your case?
We do. There are lockups that are expiring, and there are people who invest against those. Those aren't the investors that we're focused on. We're focused on long-term investors. We're focused on delivering returns through investing in our people, in our technology that will play out over years. And when you guide to more than a triple next year, and say that 28 is going to be giant, and 29 as well, we're trying to speak to people who want to be with us on this ride, and who want to be in the AI business and want alternatives to say NVIDIA, and that's who we're talking to.
Andrew, I appreciate it's only been a few weeks since this was announced and you were on the show, but how's it going with AMD? Are engineering teams already working together? Have you moved quickly on that?
I enjoyed that conversation when you had me on your show a few weeks ago. I appreciate that. And it is, you know, Lisa Su and Mark Papermaster, they acquired my last company, and I had an opportunity to work with them for several years, and I enjoyed it a great deal. We have a good relationship there, and we have disaggregated solutions running in our labs. We have close engineering relationships. These are talented engineers on both sides working extremely hard, and we will have deployments in the fourth quarter.
And very quickly, there was customer demand after the announcement.
There is enormous customer demand. Disaggregated solution provides the best of both worlds. It allows GPUs to go faster. GPUs are good at throughput and not so good at speed. They allow GPUs to go faster, and Cerebras, which is really good at speed, and we can improve in throughput. And so the disaggregated solution gives a faster, high throughput solution. And that gives you both the economics, which is throughput, and the customer experience, which is speed.
Cerebras CEO Andrew Feldman back on Bloomberg Tech. Thank you very much indeed.
All right, that was Bloomberg Tech's Ed Ludlow speaking with Andrew Feldman, Cerebras CEO. The stock is down 14% here today. It's got a market cap of $55 billion. So we'll stay on top of that story. Let's stay in the world of technology. We can do that. I want to talk to Anurag Rana. He's a senior tech analyst for Bloomberg Intelligence. Apple is going to bring in a foldable phone, $2,000. I don't know. I'm not a foldable phone. I don't know. Andrew, Anurag, thanks so much for joining us here. Talk to us about Apple and a $2,000 foldable iPhone.
Yeah, so first of all, you have to thank Mark Gurman for all the reporting that he has done on this topic. So first of all, Samsung has a foldable phone that came out 7 years ago. So the big question is, why did it take Apple so many years to come out? And you know what Mark tells us is that Apple was not happy with the crease in the middle of the phone when you fold the thing. And so Samsung has a new display, which is helping out Apple to solve that problem. So now here is the thing. We are coming to a point where the unit shipments are not growing for Apple, largely because, or it may not grow next year because they're most likely going to raise rates when they announced their next line of phones coming up the first or the second week of September. So the big question is, well, what can you do to go out and increase, average selling price? So the Pro Max sells at about $1,200, and that's, I think, where most of the users for this device will go. the real Apple crazy, the enthusiast, which only buy the brand new phones out there and they buy the Pro Max. That's about $1,200. So if you are able to just shift that buyer from a Pro Max to affordable, that's a 67% increase in average selling price for that. So I think that's what's going to happen next year, because remember, because of memory pricing, everything is getting more expensive. And that's where what we anticipate is going to happen with Apple as well.
But Anurag, are people going to buy it? I mean, I see it. I'm looking at your notes here. It says Apple's first foldable phone generate 20 to 28 billion of fiscal 2027 revenue in your scenario, based on 10 to 14 million units at the average selling price of about $2,000. I mean, is that right? You think people are going to buy into this?
Look, that's actually, to be honest, if you look at it, half of Apple's total revenue comes from the iPhone. So it's still a very small portion of that total number. I know, 24 billion is a big number by itself, but Apple on any given year sells about 250 million phones out there. So out of that, selling about 10 to 12 million phones in year one is not that big of a deal, because, I mean, as I said, there are enough people that buy the Pro Max or the Pro every year. You can see combined, that's about 30-40% of any new year phones is just Pro and the Pro Max. So it's a very sizable market, and, Apple buyer on the higher end is fairly affluent.
So talk to us about, just give us an update while we've got you here, Anurag, on China, both from an end selling market as well as the supply chain aspect. Where are we with China these days?
Yeah, so one thing that's happened with Apple over the last 3 quarters is they have gained a lot of share in China, and that's because they did not increase the price of their phone over there while the competitors have. So if you look at their iPhone results, I mean, it's just been staggering, 20+% for the last couple of quarters at least. And we have never seen that. I mean, it always used to be high single-digit growth, and we attribute a lot of that to share gain. So when we see them coming out with the next iPhone iteration, I'm really keen to see if they're going to raise the rates throughout the entire chain of phones, everything from the lower end or the higher end, or they're only going to target the higher end of the market. I think if they leave the lower end alone, I think they're going to go out and gain more market share in China. What you're mentioning is, well, going back 3 years, they lost some share in China because of Xiaomi coming up with their models. But I think these guys have done a very good job of capturing phone market. Now, another thing Mark Gurman has said, it's possible the next series of phones may have a red iPhone. And that, if it comes out, that's another thing that's going to entice the Chinese market, because frankly speaking, the US market is saturated. China and India are the 2 really big markets for them to go after, and China being the more affluent between the 2 countries.
Anurag, something you point out in this article, it's a new leasing plan. Can you explain this? Because you're saying it's going to give shorter replacement cycle for the foldable.
Yeah. If you remember, just about 3 or 4 weeks ago, Apple launched something called the Apple Upgrade Plan. It's like leasing your equipment directly from them on a 2-year or 3-year basis. So typically, you keep your phone for 4 or 5 years, but if you get on this leasing plan and, let's say you pay $55 for a normal phone, not obviously the foldable, and you just have to return it back to them after 2 years or 3 years, depending on what you use. They increased this for watches. They did it for Macs. They did it for iPads. And what we think that happens is, for people who are just thinking about a payment plan and not so much buying, $1,200 upfront payment, this is going to go very well for them and tap into an end of the market that they are not used to. Second, they're going to raise the rates of refreshes of the device. So what that does, that also helps in the revenue growth, because again, as I said, we are coming to a point, at least in the US, that you have a saturated capacity of getting new users to jump on the bandwagon.
Anurag, thanks so much. Appreciate getting a few minutes of your time. Anurag Rana, Senior Technology Analyst for Bloomberg Intelligence, from that burgeoning technology hub known as Chicago, Illinois. So there you go. Lisa, talk to us about Bloomberg this weekend. What are you guys working on these days?
Yeah, we have
Bloomberg Television, 7 a.m.
Yes, 7 to 10 a.m.
Yep.
Bloomberg TV, Bloomberg Radio, Bloomberg Business app.
Okay, so you guys are everywhere.
Wherever you go, because it's the weekend, right? Everybody's up and going and everywhere. So we have a good weekend on tap. We obviously have a surprise. I'm going to give it away. Carol and Joe are going to be on because Christina and David are off. So it's going to be a good mix. It'll be an interesting mix to see how they jive with the weekend. So I appreciate them for giving up their weekend for us.
Carol Master and Joe Matthew.
And Joe Matthew, yes.
Very good.
They're going to be filling in.
All right, so that's great. So we'll tune in for that. And thank you for sitting in today. Appreciate that as always. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. Your top stories and global business headlines are coming up right now, with S&P up 28, the Dow minus 113, the NASDAQ up 123. This is Bloomberg.
This is WBOS HD1 Brookline, Boston. WNBP Newburyport. Programming paid for by Bloomberg. Now, an update from our partners at ABC News.
From ABC News, I'm Michelle Franzen. The U.S. and Iran are no closer to ending the stalemate over the Strait of Hormuz. The Trump administration insists they are in control of the critical shipping waterway. Iran's foreign minister says the U.S. is miscalculating its strategy. ABC's Stephen Portnoy has details.
We did not hear about Iran from the president yesterday, but an Iranian agency newly created to deal with maritime traffic in the strait issued a statement yesterday. It reads, quote, "Claims and repeated posts by U.S. officials that the Strait of Hormuz is no longer blocked do not change the reality." The statement from Iran goes on to say, "The Strait of Hormuz remains blocked and will not be reopened until Iran's conditions are accepted."
The slowdown in shipping keeping oil and gas prices higher, and a day after government figures showed inflation cooled slightly from June to July, but still elevated. Today, a look at prices throughout the supply chain. ABC's Jim Ryan has the July Producer Price Index.
The PPI is a forward-looking economic indicator that offers hints at costs that industry may pass along to consumers in the months ahead. In June, wholesale prices saw their steepest decline in over a year. Last month, the trend essentially held steady, although producer prices were 4.7% higher last month than in July of 2025.
Heavy rains leading to flash flooding in the Midwest. Swift water rescues taking place in Indiana communities inundated by water. ABC Chief Meteorologist Ginger Z is tracking the storm.
Nearly a foot of rain fell in some areas east of Indianapolis. Multiple water rescues, evacuations, and road closures.
This is just complete insanity. We're just experiencing the worst flooding I've ever seen in the history of this town, I would assume.
Dozens of people rescued in Cambridge City. One man seen clinging to a power pole. Drone video shows the entire town underwater.
There was one winning jackpot ticket for last night's Powerball drawing. The winning ticket sold at a gas station in Quincy, Illinois. You're listening to ABC News.
Now, your 3-day weather forecast on Bloomberg 92.9.
Weak cold front will be sending off some showers and thunderstorms through the balance of the day as it drifts out of northern New England and heads into our area. In between some of the storms, we'll be able to squeeze out some sunshine. Temperatures will reach 80 to 85. By mid to late afternoon, most of the showers and thunderstorms should be done. Behind the system tonight, skies will become clear. Humidity will fall a bit. Will drop down to 65 in Boston. Some of the suburbs, though, have a chance at hitting 60 overnight. Looks like some nice weather moves in for tomorrow through Sunday morning. We'll have sunshine and a high of 80 to 85 tomorrow afternoon. We're clear to partly cloudy. Lows are 60 to 65 tomorrow night with 50s in the suburbs. Very nice weather for Saturday. Lots of sunshine, low humidity, a high of 80. Sun followed by afternoon cloud Sunday and 80 to near 85. I'm Rob Carolyn, and that's your Bloomberg weekend forecast. Now back to the latest headlines from ABC News.
There are concerns over the Department of Homeland Security's proposal to have agents use specialized gloves to stun someone that they're trying to arrest. The gloves send an electronic shock that transfers to someone by simply touching them. New York Governor Kathy Hochul says if the gloves are not used properly, her state could take legal action.
Appears to me on its face to be a violation of civil rights to cause that kind of physical harm to an individual, regardless of what the offense may be.
DHS says it will spend $20 million to equip agents with the gloves. California Democratic gubernatorial candidate Javier Becerra has a new proposal for Californians concerned at rising energy costs. ABC's Monica Madden explains.
The leading candidate in the race for California governor wants to offer free electricity for millions of California households.
Today, we produce so much solar that oftentimes in the afternoon, we can't make use of all of it.
Electricity affordability top of mind in the race as Californians have seen their energy bills go up nearly 40% in the last 6 years. But energy experts say Javier Becerra's idea is grounded in a real grid challenge.
Record heat in large parts of Western Europe, Britain and France now experiencing the fifth heat wave of the summer. Both countries are also facing widespread drought conditions that have killed crops and drained rivers. Michelle Franzen, ABC News.
Live from New York, this is Balance of Power with Joe Matthew.
Iran is reorganizing its military as the U.S. faces a dwindling list of options. Welcome to the Thursday edition as the IRGC shuffles its top brass in an effort to be more aggressive abroad, with news today that the U.S. is sending a new aircraft carrier to the region. We'll break down the menu of options facing President Trump when we talk with Chris Kennedy at Bloomberg Economics. More evidence of relief in inflation today, this time at the wholesale level, but hold your lettuce. We'll talk about it with Bloomberg's Michael McKee as we cover the markets, too, with Eric Weiner this hour. And as Caroline Leavitt leaves the building, one of the most high-profile departures in this Trump White House, we're about to start a whole new game of The Apprentice, and we'll do that today with our political panel. First, Wall Street. He's right at my side. We're live at World Headquarters in New York. Charlie Pellet, this is what it's like at the top of the tower.
And it's wonderful having you here. Big warm welcome on behalf of all New Yorkers, Joe Matthew, and of course our friends in New Jersey, Connecticut as well. Right now we have got a nationwide, by the way, on satellite. We got the Dow lower, the S&P, NASDAQ, they're pushing higher. S&P at a record 77.83 where we stand right now. We were trading above 7,800, up now by 35. That is a gain of 0.5% on the S&P. Number to beat, by the way, on the S&P, 77.57 right now, 77.84. NASDAQ up 164 points, up by about 0.6%. NASDAQ 100 index up 1.1%. Again, though, the Dow is slumping, weighed down by Cisco. Cisco, after earnings, down now by 8.8%. The 2-year, 4.14%. The 10-year, 4.64%. Spot gold today falling $45 the ounce to $43.63, down by about 1%. A retreat for crude. WTI down 0.9%, $82.55 a barrel. Ann Berry is managing partner at Threadneedle Ventures, and on surveillance this morning, she told us there is plenty to keep an eye on for investors, including developments out of Washington.
The narrative around the deficit in the United States, I think, is going to get more attention as we go into the midterms. The narrative around global deficits, look what just happened with Japan, and the support for the Japanese yen is going to get more focus, and we just saw this Treasury auction this week, so I think that's going to get louder, but again, the markets will shrug things off.
Threadneedle's Ann Berry interviewed this morning on surveillance. Again, Cisco Systems after earnings down now by 8.9%, even though it's forecasting $7.5 billion in sales tied to the AI data center boom this fiscal year. And Cerebras Systems projecting slower growth than some investors had anticipated. Cerebras right now, it is down by 12.3%. You might have heard the CEO minutes ago saying business to grow at exceptional rates. Cerebras again down by 12.2%. Recapping, S&P up 35, gain there of 0.4%. He is back in New York. Joe Matthew, great to have you here. Train or plane getting up here today?
We took the train. I'm done with planes. They can't get the cruise there. It's only an hour anyway. Just get on the train.
And this from a guy who loves aviation. Me too.
Like you, but there's a ground stop every time the president wants to take a walk around the block or something, and it's just DCA. It's
yet, though, I'm going to suggest there's always something going on in Silver Spring, always something going on in Baltimore, always something going on in New Jersey with Amtrak. So, yeah, who knows?
Well, I'm just glad to be in the same room with the great Charlie Pellet.
Come on.
How are energy prices lower today? I don't even understand this. Stocks are lower, the commodity is lower, and we have another aircraft carrier on the way to the Middle East.
Which is a fascinating... you could do a whole hour on what's happening aboard those carriers, but we have got West Texas Intermediate down 0.9%, so that may explain part of what's happening today.
Exxon's down
Yep,
Pipes
all your
are
oil
down,
majors.
XLE
Yep,
down.
yep.
That's what we got. Charlie, thank you.
My
We'll
pleasure,
be back
sir.
with the great Charlie Pellet in just about 15 minutes as we check the markets every day here on Balance of Power. And yeah, it's a treat to be here at World Headquarters in New York on the fastest show in politics as we connect the dots here between Washington and Wall Street. I'm a bit north today in the Amtrak corridor, but we have the same mission as the president enjoys some signing time and executive time today. I don't know if we're going to hear from him, but it is important, as we learned here on Bloomberg Radio today, on satellite radio, channel 121, and on YouTube, where you can find us by searching Bloomberg Business News Live, that another aircraft carrier is en route to the Middle East. And to Charlie's point, I think he was referring to some of the stories involving the very difficult morale problems that they're facing aboard the USS Lincoln. We have very extended deployments, overextended deployments, months over, with 50,000 men and women outside the Strait of Hormuz. The U.S. now preparing to send the aircraft carrier USS George Washington to the Middle East to replace the Lincoln as part of a previously scheduled rotation plan. The Wall Street Journal with that report now as lawmakers start sounding alarms about living conditions aboard the Lincoln, which has undergone, as I mentioned, extended deployment. A number of sailors have attempted to jump off the boat, and we're going to talk more about that a little bit later on this hour as families worry about their loved ones who are serving in harm's way. If I haven't told you about the analysis from Bloomberg Economics, let's get to it right now. The headline, Trump has few good options to up Iran pressure. Knowing that he's adopting this low-key approach, as he mentioned, and that our stockpiles of munitions have been depleted in some cases to almost nothing when you look at some of the longer range attack of missiles and so forth that we've talked about. The president says the strait is open, regardless of what we're hearing from Iran, and we've heard this from him repeatedly. Listen.
They want to make a deal with us very badly, and we probably will. I think we will, but the strait is open.
We're taking out all of their capability for anything having to do with the strait, with the Hormuz Strait. And I think in the end, we will end up just controlling the whole thing.
We don't need the Hormuz Strait, but we do it because we have to do it, because we cannot let Iran have a nuclear weapon.
We control the strait 100%. Now, can they make trouble? Yeah, they can make trouble.
Of course, controlling the strait 100% is difficult to quantify for the U.S. or Iran right now. We know that some ships are getting through, but no one seems to have total control. The element of economic statecraft, one that Iran might not even knew that it had before this. And Chris Kennedy specializes in that very thing for Bloomberg Economics, one of our top analysts in Washington, specializing in economic statecraft, and was part of the Global Insight analysis that I mentioned. Chris, it's great to have you back as always. We've been talking about this now for months. What does it tell you when we've got another aircraft carrier on the way over to relieve, and this is a report at this point, but to relieve a carrier strike group that's been there for months? This appears to be an administration bracing for the long term, no?
It does. I think it reflects, we hear a lot about the cost, the economic cost of this war, but it also, shows, and the reporting around this shows the real human cost to American service members as well. I do think that we're entering this period, maybe not use the word stalemate, but for lack of a better term, where both sides are sort of stuck in this. Trump does not feel a lot of pressure to ramp up efforts with global oil prices below $90 a barrel, markets generally doing well, and of course, wanting to avoid any escalation that would put further pressure on defensive munitions that you mentioned.
Mm-hmm. Well, when we look at your analysis here, to your point, as you write, it's not very promising when we consider military options right now. After more than 5 months of strikes and an intermittent blockade that you say has yet to break Tehran's will, Trump will likely stay the course, maintain U.S. sanctions, the blockade, the escorting of ships, engage in limited strikes. Chris, how long can we do this for?
That is the question. I think in terms of the sanctions, of course, the U.S. can continue to apply sanctions. It's been doing it for close to 50 years at this point. There are some potential options to ramp up pressure. Of course, enforcing the blockade is one. But China, is a major continued partner of Iran. We don't think that that's going to be in the playbook, at least moving up into this bilateral meeting between Xi and Trump that we expect next month. We think that Washington really wants to keep the peace now, and it's a bigger priority than the Iran war. But of course, markets might have something else to say. We had good reports about U.S. oil stockpiles come out of the Department of Energy yesterday, but global stockpiles are still being drawn down, and so the sustainability of this stalemate in terms of global energy markets, I think, is a real unknown at this point.
Well, when we look at the menu of military options, as you make clear, there really are no good ones right now. What can be done to break the status quo? Does it require the help of President Xi?
Ooh, that's a good question. Of course, President Xi certainly has some leverage over Iran. Iran depends on China in many different ways as it's become more isolated over the years. Now, I think the question there is what President Trump would have to offer Xi to get that sort of support, because we've seen so far China has not been willing to push Iran very hard, and we don't expect that they would be willing to, absent some significant concessions from the U.S. on some of China's core interests.
The president's been talking about inflation in Iran recently. You say that the measures have had a severe impact on Iran's economy. What is it like on the ground in a place that has no real reporting in the Western world, at least? What are we not seeing?
We're certainly not seeing the true toll of this war on the Iranian people. And we saw before this war was launched, increased protests, pressure on the regime. I think the challenge is that Tehran, likes to have this active adversary in the form of the U.S. It gives them something to rally support underneath as an undergirding for support for the regime, and it gives them a means to project the discontent onto external forces that are causing these problems for Iran. Of course, the regime is responsible for the suffering, for a large share of the suffering of its people. But when you have this active conflict, it gives them the opportunity to consolidate control, suppress dissent, etc. And we just don't think that this continued economic pressure on the regime is going to change those dynamics in Iran.
Part of the analysis by Chris Kennedy and his team, you hear from on a regular basis here on Balance of Power, also takes a look at what would happen if the president chose to escalate, with three primary options: more intense air and missile strikes, a more concerted effort to enforce the blockade, guide ships through. The last option, conducting an operation to forcibly reopen the strait, would require troops on the ground. Chris, the president said he doesn't want to do that, and we know that munitions are dwindling. So this is why we are in this so-called low-key approach?
I think so, and I think our view is that the president isn't going to take such a big risk on some of these more complicated operations until there's a forcing mechanism. That forcing mechanism could be Iran launching attacks, or it could be the global markets really, getting sick of this or seeing real red lights. But with midterms approaching, certainly Trump is not in a position to escalate unilaterally and potentially risk massive fallout that could have political implications for him at home and implications for our allies in the region.
Bringing to bear his great experience at the State Department, Chris Kennedy. It's great to have you back, Chris. Thank you for walking us through this. And you can find the Global Insight analysis from our geoeconomics team on the terminal and online. He's our economic statecraft expert here on Balance of Power. I'm Joe Matthew at World Headquarters in New York. We're going to turn to the inflation data this morning. Reaction on Wall Street straight ahead here on Balance of Power. Only available on Bloomberg Radio. Make sure to subscribe to the Balance of Power podcast. Go to Apple, Spotify, or wherever you do your podcast to find us. Watch us live right now on YouTube and listen anytime at our website, Bloomberg.com.
Now, Bloomberg.com subscribers can shape the conversation on Bloomberg Radio.
We're doing this because the questions are smart.
We'd love to hear from you. Submit questions for experts and guests you hear on air. Visit Bloomberg.com/AskRadio to send questions to our hosts.
Thank you for sending in your questions.
Exclusively for Bloomberg.com subscribers.
Get answers on today's headlines, breaking earnings news, and big market moves. Visit Bloomberg.com/AskRadio to join the conversation right here on Bloomberg Radio.
With the Bloomberg Small Business Report, I'm John Tucker. The California wine industry is in its worst stretch in a generation. Rubdello Family Winery filed for Chapter 11 bankruptcy in April. Aloria Vineyards and Schran Vineyards did so weeks earlier. Industry revenues fallen roughly 20% since 2020. Many of the wineries are operated as small businesses. According to wine enthusiasts, the industry is undergoing a historic contraction driven by massive oversupply of grapes, falling domestic demand, and changing drinking habits. Tens of thousands of acres of vines have been ripped out. Vineyards that once commanded thousands of dollars per ton are being offloaded for pennies. And with shrinking demand for finished wine, winemakers have no space to take excess fruit. And making matters worse, most winery owners sign personal guarantees to finance their operations, harvest, or equipment. California is also a difficult jurisdiction for debtors. And that's the Bloomberg Small Business Report.
Hi, how can I help? Well, my husband and I feel like we've outgrown our current money manager. I see. Our lives have changed, and we need something more than just mutual funds to help us in retirement.
She's right.
I hear that often. At Fisher Investments, we'd start by getting to know you, your finances, family, health, lifestyle. We tailor a portfolio around your goals and needs.
Sounds good.
Can you help with estate planning? Yes. We have a team of specialists who can help you with estate planning, Social Security, investment income, and more. We'll get to know your whole financial picture and help keep you on the path to a comfortable retirement.
And your fees?
We have a simple, transparent fee that's a percentage of the value of your portfolio. So we do better when you do better. I feel better already. At Fisher Investments, we're clearly different. Learn more at FisherInvestments.com/different. Investing in securities involves a risk of loss.
Now, your 3-day weather forecast on Bloomberg 92.9.
Showers, thunderstorms tapering off and ending at some point this afternoon. High of 80 to 85, becoming clear, low of 65 in Boston tonight. It's closer to 60 in the suburbs. We'll have sunshine and lower humidity tomorrow. High of 80 to 85. Sunny Saturday with highs approaching 80. Sunday, sun will give way to clouds and highs will reach 80 to 85. I'm Rob Carrollton with your weekend forecast on Bloomberg 92.9.
Today's AM radio is stale and repetitive.
Stay with Bloomberg 92.9, your best source for news on the FM dial, and get breaking global news with context. Bloomberg 92.9, faster, smarter, better.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. PPI Thursday, Dow lower, S&P, NASDAQ, they are both advancing. S&P right now trading at a record. Traders driving stocks higher. Bond yields falling as more evidence of moderating inflation reinforces bets that the Fed will hold off on raising rates next month. We'll have a whole lot more with our Michael McKee coming up in just a moment. But let's begin with the record on the S&P at 7782, up 33 right now, higher by 0.4%. The old high, 77.57. Right now, trading at a record. Indeed, the S&P was above 7,800 earlier in the session. The Dow, though, lower, down 0.1%, being weighed down by Cisco Systems. Cisco down 9.4% after earnings. NASDAQ up 0.6%. The NASDAQ 100 index outperforming, up now by 1%. The SOX, the Philadelphia Semiconductor Stock Exchange Index, up now by 1.9%. 2-year at 4.14%. The 10-year 4.64%, and the 30-year 5.20%. Gold, meanwhile, down 1.2%, $43.54 the ounce, while West Texas Intermediate crude $82.38 a barrel, down 1.1%. Brent $88.12, down now by 1%. An almost 3-year strike against Tesla in Sweden has been called off, with the IF Metall labor union saying the carmaker, quote, bought out the remaining workers taking part in the protest. Today, we got Tesla shares gaining by 2.1%. Meanwhile, SpaceX shares are continuing continuing to hold above last month's IPO price. That price $135. Tesla share or SpaceX shares right now $140.81. We are looking at a loss today of 3.6% in SpaceX. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. He is here in New York. Once again, your host, Joe Matthew.
Like a babe in the woods, Charlie Pellet. Great to be here in New York City and with you on Balance of Power on Bloomberg Radio. Welcome to the Thursday edition. You should dial us up on YouTube. You'll see the whole gang here together in the fishbowl, just like it was meant to be. Search Bloomberg Business News Live at YouTube and you'll find our live stream here as we consider what to eat at the lunch hour here in New York. Might it be lettuce? There's talk about lettuce all the time lately with the outbreak of, the cyclospora, and now that it's actually turning up in economic data, it's pretty hard to avoid. Are we really eating this much salad? The great humorist Rick Black once said, lettuce is the polyester of vegetables. And after the whole outbreak, I guess I'm thinking he might be right. We see an impact on economic data because of lettuce. I looked this up. We eat 30 to 33 pounds of lettuce every year in this country. And I thought Americans were eating junk food and getting fat. I bring this up because we got another reading on inflation today. We had CPI last week, big deal. Now PPI shows us another reading, this one, of course, at the wholesale level. And Michael McKee is with us to talk about it right now in our New York studios. Of course, he specializes in all of this as the international economics and policy correspondent. Nice to see you in your backyard, sir. I know you're a big lettuce guy. You're going to tell me that lettuce brought prices lower at the wholesale level?
Lettuce certainly helped. We had two things that really drove down the PPI this time, and that is energy, of course, because we saw oil prices go down in July. But fresh vegetables, which includes lettuce, down 35%, and overall food prices in the PPI down 0.9%, which is a big move. Wow. So the concern is, unless everybody decides, heck with it, we're going to just go with candy bars at lunch, this will rebound when people feel they can go back into this grocery store and safely buy lettuce.
Like energy prices can also rebound. Wholesale inflation, everyone's pegging this on energy and food costs falling, but they're both going to come back now. Oil already is, right?
Oil already is. I was just checking today. If you look at gasoline prices, retail gasoline prices, they were up in May by about 4.7%, something like that. It averaged about $4.70, and right now we're back to $4.65. So we're right there again. It was June where the prices went down to about $3.85. So if we stay at this level, you're going to see a rise in prices.
407 says AAA today, diesel's at $5.40.
And that's something that's not getting better. That didn't get better in July. Diesel prices are really a problem, and there is some evidence it's starting to leak into different parts of the economy because all the trucks that deliver all your stuff, whether you buy at the store or from Amazon, they all use diesel. Farmers use diesel. So a lot is going on with the energy area that hasn't maybe necessarily gotten the attention that other parts of it have.
Producer James says they made him put spinach on his Wawa sub last week. Is that real? They have spinach at Wawa?
Well, that's
these are decisions we can't control, Michael McKee.
We can't control.
Spinach on a sub? They throw you out of New York for that.
Well, a lot of fast food places did take lettuce out of their fast food.
Yeah, exactly. That's what you're left with. Oh, he did it voluntarily.
Oh,
interesting. Well. Have you tried kale on the sub? So you put this all together, and you're not saying anything that's encouraging right now, even though the headline is. But if you're Kevin Warsh, is this the relief you needed?
It's too early to say because we get another PPI and CPI, and we get the PCE before they meet again. And if nothing changed, where we are now in terms of the CPI and PPI is just where we were at the end of February before the war started. And at that time, the hawks were still not happy because even at 3.4% or whatever on the CPI, they're saying we are still well above the target and haven't hit the target in 5 years. So we need to be more active. And they can still make that same argument today because we're at the same level. So whether or not we see prices for energy rebound, there is still going to be an argument. And so it isn't clear yet how this will turn out, because more and more Fed officials seem to be sympathetic to the raise rates argument. It's the headline makes it a little harder, but their view is heck with the headlines. We've been trading on headlines for 5 years, and we haven't gotten there.
Not a peep from the White House today on this.
Well, they've been very quiet about a lot of things.
Yeah, usually you'd get a statement or something, a victory lap on Truth Social. It's kind of like no one's even looking. It's a pretty big deal.
Maybe
for the
they
White
figure
House.
people don't focus on the PPI a lot, and really, Wall Street looks at it for backup information. It's not the most popular number out there. CPI, I'm sure.
Well, yeah,
got some.
Only
got
at
some play
Bloomberg
down
do we
there.
stop down for the PPI,
Right? Because we're. Well, I was going to say we're smarter than everybody else, but
Wanted to hear what you
they're
had
just
there.
as smart as we are on Wall Street. We all get the same numbers.
Thank you, my friend. It's good to see you. Michael McKee, live in New York, Bloomberg International Economics and Policy Correspondent. Does Wall Street care about PPI today? There's a lot to care about. As we mentioned with Charlie Pellet earlier, oil prices and oil stocks, for that matter, are lower for some reason, with another aircraft carrier on the way, and the Strait of Hormuz, well, less than totally open or under anyone's control at the moment. We're rounding out the end of earnings reporting season, though, and the news was pretty darn good. If you look at the S&P 500 right now, if you looked at that in a vacuum, you would say, wow, this year is killing. Earnings reporting season was much stronger than we expected, and this is a stock market at all-time highs. When you look under the hood, it's a lot more complicated than that, and we've talked about the rotation before with Eric Weiner. And I want to tell you, I came all the way up here to New York. I got on the train. I'm here. I'm in the studio. I was looking forward to spending time with Eric Weiner and shaking his hand, and this is the one day that he's, well, not here. Bloomberg News senior editor for equities. Eric, we're going to get this done someday. Just wondering what you think of this market today, and whether we should be accentuating the positive, an all-time high, or some worries about what we're seeing under the hood.
Well, okay. Mike is right that oil prices are still high, rates are high, and inflation isn't going away. However, and if you look at the data right now and you are concerned about borrowing costs, and that's everybody who's investing really in technology and AI, you probably feel a lot better today than you did on Monday. When we came in on Monday, the chances of a hike, like in this meeting, was better than 50-50. And now it's closer to 35%. So people are kind of discounting that there's going to be an immediate raise in borrowing costs, and that helps with all of the companies that are raising debt right now for to build out AI and to help the economy. There was one other thing, I don't know how much attention it got, but Richmond Fed President Tom Barkin was on today, and he was talking about how the job market looks vulnerable. And if that's going on, now he's not a voting member on the FOMC this time, but if that is going on and that is something that they're seeing, they really can't hike into that, not just because of the dual mandate thing, but also because it's a growth signifier and they're not going to choke off growth in the employment market. So there are a bunch of reasons to feel better about the landscape today than there was, at the end of last week. And that's encouraging. And you're seeing it today, or over the last couple of days, with tech rising, real estate rising, mortgage rates coming down. All that sort of stuff is kind of, bullish for the market.
Yeah, interesting. And of course, last week you mentioned we were celebrating some pretty hefty earnings by every measure. This has been an incredible earnings reporting season. Corporate America is showing up. Is that why we're kind of taking a blind eye to the war in Iran?
Well, yeah. Okay. So that's a a real interesting duality, which is that when the war is really a thing, and the Straits of Hormuz are absolutely closed, and people are talking about it, which is something that the president was doing a lot of, then the market gets skittish. But as just the rhetoric has quieted down, even though, if you look at the actual ships passing through Hormuz, it hasn't changed at all. And oil prices are still high. There is there's just less noise around the market. And that enables people to focus on what's going on with the numbers, which, as you pointed out, is great. So if you're looking at reasons to buy, and you're looking at also companies like with the big tech companies, they're not that expensive. They've come down quite a bit. So if you're looking at NVIDIA and you're like, well, they're going to grow a lot, and suddenly they're priced basically like the S&P 500, then that's a buy. So it's like this moment right now looks great. Where we look after two other inflation reports and after the next Fed meeting, but you also have Jackson Hole.
Yep.
After all of that conversation, that'll be much more of a guide for where the market sort of goes.
So until then, it's rally time. Eric, it's great to see you. Welcome back. Let's do it in person someday. I know we can do it. Eric Weiner, Bloomberg News senior editor for equities. Even Micron is surging right now, up over 6% or $57. This could be a $1,000 stock again. Remembering it's selling for like 6 times earnings. Confounding investors who freak out after such a ridiculous rally. We'll have a lot more on the markets with Charlie Pellet straight ahead, and we're going to assemble our political panel as ever. Rick Davis and Jeannie Shanzano as Caroline Levitt prepares to leave the building. This is Bloomberg.
Faster, smarter, better. This is Boston's best source for news on the FM dial. Bloomberg 92.9. Coming up, the latest market-moving headlines from Bloomberg. First, an update from our partners at ABC News.
ABC News, I'm Michelle Franzen. A federal judge is going through documents in the Epstein files that were redacted or withheld by the Justice Department. In June, the judge ruling that the DOJ's omissions violated the Epstein Files Transparency Act.
The DOJ, in a way, is kind of using the victims of Epstein to justify withholding a lot of this information. The concern, though, mentioned in this lawsuit, mentioned by, for example, the New Mexico Attorney General, who's separately suing over these kind of documents, is that these are too many redactions, that some of these people aren't in fact victims, but actually associates of Epstein who are now being protected under the guise of the Epstein Files Transparency Act.
ABC's Peter Haralambos. In California, a 3.8 magnitude earthquake rattling the East Bay this morning, centered near the Oakland-San Leandro border. Residents reporting that they felt it. Authorities say so far no signs of damage. In the Central Pacific, Tropical Storm Lala has formed. A hurricane watch now posted for Hawaii's Big Island through the weekend. This is ABC News.
Hi, I'm Christina Ruffini, inviting you to join us for Bloomberg This Weekend. Catch the show Saturdays and Sundays starting at 7 a.m. Make Bloomberg #1 on that weekend to-do list. Watch and listen on Bloomberg Radio, TV, and the Bloomberg Business app.
Workdays work better with food. And not just any food, the good stuff. That's why there's EasyCater, the workplace food platform where you can order from a huge variety of great restaurants for any group size, anytime, anywhere, all in one place. Whether it's gourmet deli trays for the client meeting, spicy noodles for the night shift, tacos for the weekend crew, or a big box of brownies to tell your team, thank you. Just use EasyCater, one platform to feed them all and feed them well. Start an order at easycater.com.
Veterans and active duty service members, when your call to service ends, your mission doesn't have to. Go from GI to IT in just a few months at My Computer Career. Prepare for a high-demand career in cybersecurity, protecting people, systems, and institutions from real cyber threats. Cyber warriors are needed now. Will you answer the call? Go to mycomputercareer.edu/CWP to learn more. That's mycomputercareer.edu/CWP, an elite CompTIA certification partner. VA education benefits are available to those who qualify.
Next week on Leaders with me, Francine Lacqua. I speak with Harvard Business School professor Linda Hill about what CEOs need to know to be successful.
It really is not about them. It is about the organization.
About how to lead in the age of AI.
That requires a lot of confidence.
And why great leaders embrace conflict.
You need to amplify difference.
Listen and watch Leaders, the podcast with me, Francine Lacqua, on Bloomberg TV or wherever you get your podcasts.
On a recent edition of the Odd Lots podcast, Joe Weisenthal and Tracy Alloway speak with Fishwife founder and CEO Becca Milstein on how an anchovy gets from the ocean to a can.
Give us the short version of like where a fish is caught and the steps it takes until I get it in my kitchen.
The first I'll give an example of is our Cantabrian anchovies. So we source our anchovies from a tiny town in northern Spain called Santonia. And if you go to this town, Santonia, you will be blown away because it is completely occupied by anchovy canneries. Like that is the town. You walk through this tiny city and it's like every canned anchovy brand you've ever heard of, their logo like plastered on a big warehouse. So in that case, the fishermen are going out like 6 miles from shore. They're using the Persine method of fishing, which is, it basically is like a big, wide net that's cast out into sort of the top of the ocean. It encircles a school of fish, and then the net is sort of pulled together and the fish are brought out of the water and then immediately put on ice. And then they're brought, 6 miles into shore and they're taken to the anchovy auction and they are marked with a number that indicates the quality of the anchovies. And then the bids begin. There's usually 1 or 2 folks from each cannery. And keep in mind, these canneries are, by and large, maybe all multi-generational family owned. So the cannery that we work with was started in the 1940s by a man who now has had 3 generations of offspring. The grandson of this man goes to the anchovy auction and he'll go buy a bunch of anchovies.
That's what's on a recent edition of the Odd Lots podcast. Listen to the full episode on Apple, Spotify, the Bloomberg Business app, or anywhere you get your podcasts.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. We're looking at back-to-back gains for the S&P 500 index, up now by 37 points, 77.81. We are looking at a record up by about 0.5%. The old high to take out today will be 77.57. Right now, though, a record on the S&P. The Dow, however, trading lower, down now by 56 points. Did open higher, but right now down by about 0.1%. NASDAQ up 0.6%. The NASDAQ 100 index outperforming, up by 1.1%. The SOX, the Philadelphia Stock Exchange Semiconductor Index, up 1.9%. The 2-year 4.14%. More evidence of moderating inflation, reinforcing bets that the Fed will hold off on raising rates next month. The 10-year 4.63%. The 30-year 5.20%. But again, that 10-year 4.1, the 2-year 4.14%. Spot gold down $44 the ounce, down 1%, $43.63. While West Texas Intermediate crude falling 1.6%, $81.94 a barrel. Brent $87.68, down now by 1.5%. Money markets are pricing in less than a 40% chance of a September Fed hike. That is down from roughly 50% earlier in the week. Stephen Parker is co-head of global investment strategy at JP Morgan Chase Bank, and he was a guest this morning on Bloomberg Surveillance.
We've gone from the start of the year where markets were pricing in 3 cuts to now where markets are pricing in a hike. And throughout that, while it's been a headwind for the bond market, the equity market continues to chug along. Earnings continue to chug along. And if this is a one and done like we expect, then I think that's not a situation that's going to tighten financial conditions to a point that's going to get in the way of that equity trade.
Again, we are looking at oil moving lower. West Texas Intermediate crude down 1.6% among the oil super majors. ExxonMobil down 0.6%. Chevron, though, pushing higher by 0.3%. ConocoPhillips down by 2.1%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcast. I'm Charlie Pellet. He's here in the studio here in New York. Joe Matthew, that's a Bloomberg Business
Thank
Flash.
you very much, Charlie Pellet. What's the all-time for S&P? We're at 77.86 here.
Affirmative. And the all-time high on the S&P 500 index, 77.57. We can go decimal with a 0.64 in there.
Wow,
We got
really
the data.
Interesting. I mean, I could have looked in the terminal, but I'm sitting next to Charlie Pellet.
And I got to ask the question, what are you doing in New York?
Well, it's funny you ask. I came up here to have a little weekend party. And I know I'm here on a Thursday, but it takes a couple days to put the weekend show together. And I am going to join forces with the lovely and talented Carol Masser to host the weekend program this weekend, and we're excited about it.
You said party. I guess we can qualify that as a party. They had a great show in the morning.
Yeah.
All right. Well, I'm going to push the point. Can you tip your hand? Any guests?
Well, yes. I'll get into some of that tomorrow. I am told that Matt Shirley is working on some names that are going to blow the doors off around here. I talked to Ben Wickler today, the former chair of the Wisconsin Democratic Party. Used to produce Al Franken's radio show.
Seriously?
Yeah, it's funny.
Wow, whatever happened to Al Franken?
We do. I'm not even getting into that right now, but that's one of the voices we'll hear. This whole contest of the Social Democrats versus the moderates is a really interesting sort of moment we're in politically.
Especially here in New York.
I'll have more on the party. Yes, in New York, when we talk later. Charlie Pellet, he'll be back at 1 p.m. Eastern time. We can't be trusted together. The teacher definitely would have separated us in the classroom. Big stuff at the White House. I know it's the press secretary, but this isn't just any press secretary. This was a loyalist, is a loyalist, a true believer, started as an intern in the first Trump White House, was hired in the press shop by Kayleigh McEnany. Remember that name? After Donald Trump lost in 2020, she became a comms director for a member of Congress right here in New York, Elise Stefanik. Then she ran for Congress herself at 25 years old. And while it didn't work out, she got a lot of TV time and ended up becoming President Trump's press secretary. Yeah, like 25 years. She's 28 now. We're talking about Caroline Leavitt announcing yesterday that she's leaving the building. Or should I say, well, Donald Trump scooped her on her own departure. That happens a lot at this White House. Caroline will now be one of my top outside advisors, he writes, and an influential voice within the Republican Party as we work to defy history and conclusively win the midterm elections. That was on Truth Social. If you're on YouTube, you see it on your screen. That's before she said anything. And then followed on with a lengthy post saying it was the honor and adventure of a lifetime. She's going to be taking care of her kids. She just got back from, of course, maternity leave. The question, though, is what she will do after, right? She's 28 years old. She's got the president with her here and will apparently continue as a top advisor. But then who's going to replace her? This is like the ultimate game of The Apprentice. We've got a new season starting as we look for a new press secretary. Abigail Jackson, one of her deputies, has already left, so this could be anybody, and the name game has been fun. Let's get into it right now with our great political panel. Bloomberg Politics contributors Jeannie Shanzano and Rick Davis join us right now on Balance of Power. Rick is our Republican strategist and partner at Stone Court Capital. Jeannie is our Democratic analyst and democracy visiting fellow at Harvard Kennedy School's Ash Center. Great to see both of you here. Rick, what's your thought on the departure to begin with? The president is losing. I know there have been a couple of cabinet officials and some high-profile ones. We all remember what happened with Kristi Noem, and I believe the president announced that one before she could as well. What does this departure mean for the president's ability to keep this close circle of confidence he has in the White House?
Yeah, normally this is a pretty limited story, the idea that a press secretary is going, but Caroline Leavitt really was the mouthpiece of Donald Trump. I mean, you know, he talks a lot to the press, so he's out there all the time himself, but she had the confidence of the president. Yeah. He was really backing her, and I think it'll be a big loss for the White House. But look, I mean, at the end of the day, as you point out, now we're going to enter the real fun part, which is, finding a replacement. And it will be just like out of TV. I mean, we know Donald Trump tends towards central casting, and so calls are going out, I'm sure, right now. But I would say what's interesting is the swinging door of Washington. Almost all the senior people to have left this administration are women. In fact, maybe all the senior people have been women. And so if you are believing the kind of appointments that Trump makes to these kinds of jobs, you'd have to start with a woman.
Wow. Really interesting point, Rick. That is very true. And, Jeannie, we have to reflect on the period of time that Caroline Leavitt spent in that briefing room in which seats were reshuffled, credentials were moved around. We had the new media seat put in there. People in the front row were not always called on. Some people believe that she was singular in helping Donald Trump diminish the role of the press in the White House. Do you believe that?
I do think she certainly left her mark on the White House press pool. One thing she had was this media hall of shame, which was like this White House website where, the fake news, or so they were deemed, reporters were noted. As you mentioned, she opened the White House press pool to sort of non-traditional media folks, which I don't think is such a bad thing. So she certainly left her mark. I don't think we can underestimate what is so stunning about this, which is the timing, just 80 days or so before the midterm. Certainly, this is somebody at just 28 who has two very young children, one just 1 month old. She comes back, and then we hear the other day, less than a month later or a month later, she is leaving. Anybody who has been a working mother knows that that is a very, very tough thing to do. And the fact that she came back after a month, and reportedly Donald Trump was calling her throughout that very brief 1 month maternity leave, that is very tough. And I take her at her word when she says it's very hard to do both of these jobs well. Yep. And I think in some ways it is a model for other young women and women of all stripes. You can do both working and you can be a mother, but you really do need a full-throated maternity leave. And I wish that this would be an incentive for the federal government to allow us finally to have something we have never had. Yeah. And we depend on our companies to give us. And again, 1 month is certainly not enough for any mother or woman, or certainly child. The impacts are really, really tough.
Oh, that's a great point, Jeannie. And I don't know where we're going from here, but this is going to be the fun part. Axios reporting the president has not picked his replacement, but, quote, he's going to enjoy the heck out of this process of picking someone, said a senior official. The New York Post actually naming names, a long list, too. Alina Habba is on here, Matthew Boyle, Stephen Chung, Katie Miller. Katie Miller? Monica Crowley, Jason Miller. He's been around the house a lot lately, Rick, from what we understand. Scott Jennings keeps coming up. It wouldn't be the first time, right? We saw a president pull somebody from cable news. And then I see Carrie Lake's name on here. Who else do we add? George Santos? Rick Davis?
Tell me not George Santos.
I'm trying. What do you got?
Yeah, look, I mean, anything's possible. I don't think George fits the sort of central casting profile. But look, we're entering a political cycle, as Jeannie mentioned. We only got 80 days to the election. So you would think you'd want to have somebody in there who could throw some punches and be really uber committed to being on message for the administration in support of their candidates running for office. So a Jason Miller, a Stephen Chung, I mean, these guys are really experienced hacks. They know what they're doing when they're in front of the media, and they can drive a message like nobody else, but they don't fit central casting for Donald Trump. So Alina Habba, she's thrown out of her job by a judge. Maybe she needs employment right now. I guess I would put my money on Katie Miller, former Doge press secretary, Stephen Miller's wife. You tend to circle the wagons in times like this in the White House, and that means only the most loyal, close-in folks who you can trust get these kinds of jobs.
It just rings true. Well, I've been hearing about Katie Miller the last 3 days ago, and viral with this Marco Rubio interview. Sometimes timing is everything, Jeannie, not to mention who you know. How about Spencer Pratt, Jeannie? Or will Bill Pulte be the next secretary?
Well, you just mentioned Marco Rubio, and nobody has done a better job filling in when Carolyn Levitt was out than Marco Rubio.
So give him another job.
Give him add to his resume. And of course, Joe, he had the Katie Miller interview where he talked a lot about Pop-Tarts. Yeah. So I think we may see something there. I look at Kelsey, Joe, they're saying Anna Kelly, they're saying Scott Jennings, who you mentioned. Yep. They're also, to a certain extent, we're hearing a few other names, including Alina Habba, but those are the two on the top. And we also are hearing about one of Donald Trump's closest allies, Natalie Harp. So a lot of names to go around there.
Interesting. Sean Spicer, I guess, not on the list. How does he do this, Rick? How does this season of The Apprentice work? Because, Jeannie just mentioned Marco Rubio. He's had cabinet secretaries coming through, or did so when Leavitt was on maternity leave. It was a bit of an audition for a number of these folks, maybe not for this job. But do we see him start throwing people up in front of the briefing room to see how they act, or does he just watch interviews on TV? What's the process going to be?
Well, he does definitely watch interviews on TV.
Yeah.
He's the first person to identify, a cabinet member or somebody from his administration talking on Fox or one of these outlets. And so for sure, both the interviewer and the interviewee are being interviewed by the president every time he thinks about a job like this. Like wild card, bring back the mooch. Where's Scaramucci when you need him? I mean, the guy, maybe he only lasts a week, but it would sure fill the vacuum this summer.
So how about the future of Caroline Leavitt? Jeannie, you heard me tick through her bona fides. She's going to do something else. She's extremely talented, whether you agree with her style or her politics. She's very young. She's very strong, and I'm sure that she has a big future ahead of her. She's already run for Congress. What else do you see Caroline Leavitt doing?
I don't know, Joe. She may go for a job in the media at some point. She was an intern at a local news station up there. But, Joe, I'm going to make a prediction. This is not the last of the changeover we're going to see in the White House. Apparently, Susie Wiles has told cabinet members if they're going to leave, they have to leave now because she knows come after the midterm, harder to get them confirmed through the Senate. Not relevant really to a press secretary, but certainly cabinet members. So we may see more turnover than less before the midterm.
Got about 30 seconds left, Rick. Do you see the door swinging between now and November?
Yeah, this is just the natural breathing in of an administration. It wouldn't be surprising for anybody to go. I guess the bet you want to make is who's the first male cabinet member who's going to leave, because it seems the only ones who do leave are the women.
What did Scaramucci said? She made 50.7 Scaramucci's? That's a tenure, man. That's a big deal. Trump White House. Rick Davis, Jeannie Shanzano, thank you both. They're coming back in our second hour. We'll connect with Kaylee Lyons in Washington, and we'll welcome our global television audience to the fastest show in politics. Stay with us. On Balance of Power, we're live in New York, only here on Bloomberg. Make sure to subscribe to the Balance of Power podcast between now and then. Get to Apple or Spotify, whichever you use for your podcast. We'll be there and listen anytime at our website. It's Bloomberg.com.
Now, your 3-day weather forecast on Bloomberg 92.9.
A few more showers and thunderstorms possible today, but they will eventually come to an end at some point this afternoon. 80 to 85, clearing and 65 overnight. Sunny, 80 to 85 for tomorrow. The sunny weather continues on Saturday. It's comfortable. Highs are near 80. Sunday, morning sunshine, increasing cloudiness in the afternoon, and 80 to 85. I'm Rob Carolyn with your weekend forecast on Bloomberg 92.9.
Gain insight on the innovators, disruptors, and tech-driven trends shaping today's complex economy. I'm Carol Masser.
And I'm Tim Stenevec. Wrap up your workday with the Bloomberg Business Week Daily Podcast.
We bring you deeper dives into the stories shaping your world, from the evolution of AI to the shifting priorities of global business.
Plus, Silicon Valley power players and the latest tech trends.
Catch up on the conversations you missed during the day.
Subscribe to the Bloomberg Business Week Daily Podcast on Apple, Spotify, or anywhere you listen.
Don't wait for headlines. Watch the news unfold in real time at Bloomberg's New Economy Forum, live from New Delhi, October 13th through the 15th, as global leaders come together to tackle the biggest issues shaping our future, from geopolitics and global trade to technology and the world's new balance of power. You'll have a front row seat to the conversations that matter most. Watch live at BloombergNewEconomy.com. That's BloombergNewEconomy.com.
Is life insurance still on your list from earlier this year? Now is the perfect time to just get it done. A buddy told me that securing life insurance sooner rather than later can help you lock in lower rates for years to come. So I added this to my list this year and got it done. I called SelectQuote and was shocked at how easy and affordable life insurance is. I'm 40 and got a $500,000 policy for $18 a month. My wife's also 40, and her $5,000 policy was only $16 a month. Plus, with SelectQuote's same-day coverage, no medical exam was required, and we were covered by the time we hung up. Checking this off my list felt great. But the peace of mind knowing my family is protected feels even better.
Call SelectQuote at 1-800-280-5858 for your free quote today. That's 1-800-280-5858. Or go to SelectQuote.com. That's 1-800-280-5858. Details on example rate at SelectQuote.com.
The entertainment business is changing fast. At Bloomberg Screen Time, we'll bring together the executives, creators, investors, and entrepreneurs shaping what's next in Hollywood, music, sports, and gaming. We'll talk about the biggest stories in media, like the merger of Paramount and Warner Brothers, the booming live events business, and the potential impact of AI. I'm Lucas Shaw, and I'll be hosting Bloomberg Screen Time in Los Angeles September 30th and October 1st. Join us and request your invitation today at bloomberglive.com/screentime/radio.
Say goodbye to old school AM radio. Listen to Bloomberg 92.9 for speed, analysis, and global context on the biggest stories. Your best source for news on the FM dial. Bloomberg 92.9. Faster, smarter, better.
This is WBOS HD1 Brookline, Boston. WNBP Newburyport. W291 CC Haverhill. W221 EE Topsfield. Programming paid for by Bloomberg.
Live from Washington, D.C., this is Balance of Power with Joe Matthew and Kaylee Lines.
President Trump puts the economic squeeze on Iran, even as a new aircraft carrier steams toward the region. Welcome to the Thursday edition. As the White House faces dwindling options militarily to reopen the strait, beyond simply waiting. I'm Joe Matthew in New York alongside Kaylee Lines in Washington. Kaylee, oil prices are actually lower today, even as the administration appears to be making plans for the long haul.
Yep, that's why the Lincoln is heading home after being deployed since November. It doesn't seem they're going to keep it in theater any longer as they send in reinforcements. But to your point, Joe, that means that it does look like our force position is going to maintain for some time to come. All that said, oil prices are lower, and you're seeing the effects of the easing we saw in energy prices in July in inflation data once again today after the cooler CPI of yesterday. Once again, cooler PPI data flat month on month in the month of July. That's, of course, fueling bets that the Fed, or I guess defueling bets, perhaps, that the Fed is going to hike this year as the market is now pricing out that scenario.
I guess, unfortunately, they could come back. I mean, we have seen quite an increase in oil prices since the resumption of some kinetic action since that last report was taken, Kaylee. And then there's lettuce. We saw this massive decline in lettuce prices because of the outbreak, and those are eventually going to come back, too. So the question, I guess, is how long the relief can last for Kevin Warsh.
Yeah, and ultimately what that means for the bond market. We, of course, saw a 10-year auction yesterday that had the highest yield going back to 2007. And at this hour, right now, there's a 30-year auction going on, $25 billion of new issuance. And we'll be looking to see what the takedown of that is and what yield it ultimately draws with the higher borrowing costs we have been seeing overall. And we'll be keeping on top of that, discussing it perhaps with the former chair of the House Financial Services Committee, Patrick McHenry, when he joins us shortly.
That's right. We'll check in with Tyler Kendall as well at the White House. Kaylee, as we try to connect the dots on all of these stories, and we'll have our panel with us, Rick Davis and Jeannie Shanzano, for the hour.
And of course, we also have Charlie Pellet, although I don't have Charlie. You have Charlie with you in New York. I feel like you should be doing this toss. Charlie, how are the markets?
Right now, looking at a mixed market with the Dow lower. And by the way, great having Joe here in New York. We have got the Dow Industrials down now by just about 35 points, dropped there. Little change, down under 0.1%. S&P looking at a record right now, 77.92, where we stand on the S&P 500 index, up 43, up by about 0.6%. Number to beat today will be 77.57. So again, a record now on the S&P. We've got NASDAQ up 191 points, up 0.7%. The NASDAQ 100 index outperforming, up by 1.2%, even with some weakness in a couple of prominent tech names. Cisco after earnings down almost 9%, and Cerebras Systems also after earnings down almost 13%. The 2-year on this PPI Thursday, 4.14%. The 10-year, 4.63%. Your 30-year, 5.21%. Gold right now at $43.68 the ounce, down 0.9%. Crude, a lot of people talking about what's going on with oil today. Energy falling. WTI down 1.6%, $81.91 a barrel. Barrel of Brent, $87.70, down by 1.4%. Joe and Kaylee, that is a Bloomberg Business Flash.
All right, Charlie Pellet at my side here, Kaylee. I'm spoiled at World Headquarters in New York. We'll have more on the markets with the voice of Wall Street and the New York subway. I can actually go listen to Charlie Underground while I'm here. Coming up in just about, 15 minutes time. Kaylee, it's been interesting watching the rhetoric around Iran develop I guess devolve over the last couple of days, with the president opening this week talking about a low-key approach. Now we're sending reportedly another aircraft carrier to relieve the Lincoln, suggesting that the U.S. is in fact girding for a longer commitment. And of course, the president has been talking as if the strait was under our control for weeks now. Listen.
They want to make a deal with us very badly, and we probably will. I think we will, but the strait is open. We're taking out all of their capability for anything having to do with the strait, with the Hormuz Strait. And I think in the end, we will end up just controlling the whole thing. We don't need the Hormuz Strait, but we do it because we have to do it, because we cannot let Iran have a nuclear weapon. We control the strait 100%. Now, can they make trouble? Yeah, they can make trouble.
And before we get to that trouble potentially in the Middle East with Tyler Kendall at the White House, I do want to briefly mention that we do have the results of that Treasury auction in. Remember, $25 billion in 30-year bonds auctioned off, drawing the highest yield going back to 2001, 5.216%. That is higher than the pre-sale when-issued yield of 5.212%. So we'll look for the finer details on what the actual drawdown was like in the overall demand picture here. But highest yield since 2001, after, again, the 10-year auction yesterday saw the highest yield since 2007. We'll get more into what that means for the financial sustainability of the United States with our current debt and deficit in just a moment. But let's get to Tyler at the White House first and foremost. As Tyler, obviously, as we consider what the United States is having to fund with all this issuance, in large part, it's defense, as that's one of the biggest outlays for the U.S. government. And it seems that despite what we just heard from the president repeatedly over the course of the months, that the U.S. is in control of the Strait of Hormuz, that control does come at the cost of having to have a military presence there, maintaining this blockade. The Wall Street Journal obviously reporting now that we're sending in a new aircraft carrier to relieve the Lincoln. What does this signal?
Well, Kaylee, just on the heels of that reporting, that, of course, comes amid lawmakers here in Washington demanding answers about the viability and the sustainability of keeping crews deployed that long. Senator Richard Blumenthal sent this letter to the U.S. military saying that the Lincoln has been deployed for more than 250 days and has not made a port call in 200 days, setting a record for consecutive days at sea. We should mention that this switch in aircraft carriers that you both outlined at the top of the program was planned, according to the Wall Street Journal's reporting. So it didn't necessarily come on the heels of other reporting about what those conditions really do look like. It is something that we will keep our eyes closely on. Our own analysts at Bloomberg Economics have gone through their own projections about exactly where our stockpiles at the moment stand. And I would pair that with new reporting today out from the Washington Post that so far the U.S. has used up about 25% of its Reaper drones. These are those smaller scale weapons that are used in targeted strikes and also to conduct surveillance. And Joe and Kaylee, I spoke to the Army Secretary Dan Driscoll the other week, who says that the U.S. is trying to supercharge production of these lower cost weapons, in part because we know that it would be easier to get those out the door and in terms of the timeline compared to some of those more expensive weapons that it takes longer to produce.
Tyler, it was only hours ago we learned about the press secretary's departure. You're not going to have Caroline Leavitt in the briefing room there for a lot longer, and I'm wondering if you're hearing anything about a process that the White House will be following to replace her.
Well, Joe, if we look at what happened when Caroline Leavitt was on maternity leave earlier this year, for example, the White House didn't necessarily put out an interim press secretary to conduct briefings, instead using basically a rotating cast of the high-level cabinet officials like the Secretary of State and the Secretary of the Treasury to give the press updates. It definitely comes at an interesting time, as I know that you have pointed out. We are, about 3 months away from the midterm elections, and Caroline Leavitt has been such a close ally and advisor for this president. We'll have to see where it ultimately evolves. Also considering the fact that President Trump himself often briefs the press directly. Not yet today. He has a few different closed events on his schedule, including another one that starts at the top of the hour. We'll have to see if any of them open up amid what has been this standstill and very little public progress when it comes to any sort of movement in the conflict with Iran.
All right, Tyler, thank you so much. She's live on the North Lawn of the White House. Bloomberg Washington correspondent Tyler Kendall. 82 days to the election. Not that we're counting as we add the voice of Patrick McHenry, Bloomberg Politics contributor, former Republican congressman, former chairman of the House Financial Services Committee, and of course, former Speaker Pro Tem. It's great to see you back, Mr. Chairman. Welcome. With 82 days to the election, we return to our breaking news that Kayleigh mentioned just a couple of moments ago. A 30-year bond auction, Mr. Chairman, just pulled the highest yield since 2001, 5.216 on this PPI day when some folks are celebrating lower prices. I'm just wondering what you think that means for prices and our economy as we head for the midterms 82 days from now.
Well, there's politics and there's Mr. Market. And to quote James Carville from the 1990s, when he dies, he wants to come back as the bond market because it's all powerful. I think we're getting back to those days where the bond market can speak quite loudly to Washington about its overspending and the prognosis on the economy. I think this goes right back to Chairman Warsh's stated goal for the Fed to step back from being an active participant and manipulating the market and letting the market speak. And it's speaking in a very loud way today.
Well, so is that spoken word from the market one that's going to be heeded by your former colleagues in Congress? It's one thing for Kevin Warsh to say, look, the Fed is going to stop being such a player in here as we take a look at our balance sheet. We're going to let the market do as it will. It's another to actually see the fiscal policy response from Congress. Is this actually what brings everyone to Jesus on the debt?
No. And I've been a longtime fiscal hawk, and my constituents stopped asking questions about it a few years into my service. It has not been a serious issue for the political class. It's not been raised by the public, this question of debt and deficits, because they haven't felt the effect of it. I think of it as, for the body politic, much like heart disease. It doesn't matter, and it's not evident until it strikes, and it strikes in a brutal way. And this is the wake-up sign where we need to start taking statins, review our diet, and actually slim down on our overspending. This also comes at a time where the federal government's on course to have the largest structural deficit it's had outside of wartime as a percentage of the GDP and in total terms. This is a major issue that needs to be wrestled with by elected officials, but it begins with the populace saying something about it.
Well, Mr. Chairman, when's the come to Jesus on the Clarity Act? This is something we were looking forward to talking to you about today because all the tip sheets addressed it this morning. We know it didn't get taken care of by the Senate before lawmakers left town, and now everybody's home. And they're hearing from their community bankers. They're also hearing from banking lobbyists in Washington, D.C., hoping to use this period of time to try to address stablecoin yield in a way that will not result in deposit flight. What's going on here? Does this last-ditch effort work?
They are making a last-ditch effort. That's what all the banking industry can do at this point, is to try to bring this up at town hall meetings and when people are at home and out of Washington. It's falling on deaf ears, though. This major piece of the bank's lobbying effort against the Clarity Act is that by allowing yields on stablecoin products, you're going to have massive deposit flight. The truth is the banking industry and the banking lobbyists in Washington have not stopped the death of small banks in America. We have 2,000 fewer banks than we did pre-financial crisis. A lot of that has to do with the cost of being a bank in the United States. The banking lobby hasn't addressed that in any substantive way. So they're turning their ire to crypto in order to stay together for the banking associations and their political power. Point one. Point two, I would say, is that on deposit flight, these stablecoin yields products have been out in the marketplace for 4 and 5 years. You've not seen deposit flight. There are numerous studies from universities, from the Federal Reserve, from other entities across our government that have shown this fight against deposit flight is just a fiction of the banking industry. But they've got to shoot their shot. Otherwise, Clarity Act will be passed later this year, and they've got to do everything they can to maintain their political power. The banking industry does. The establishment is the establishment for a reason. Once they get in power, they get entrenched in power, and that's what we've seen from traditional financial products. And this is what we're seeing in the lobbying effort, especially they're tooting their own horn in Washington very loudly this August that they are showing their political power. We'll see in the fall if that, in fact, matters to the votes of the Clarity Act. I don't think it will, though.
Well, Mr. Chairman, to your point about these yield rewards programs have already existed and you haven't seen that deposit flight, is the argument not that you finally give this industry the market structure and regulatory regime it's been asking for? You legitimize it in that way, allow it to continue to grow and develop, and ultimately, down the road, it is a legitimate competitor with or major disruptor to the traditional financial system. It's not supposed to be immediate, is it?
No, but that's not the argument they're making. They're saying that this is that you've seen deposit flight and you'll see more deposit flight. There's not been evidence of deposit flight. So on their first point, it's not true. The second point is, I think we think of our money market funds and savings accounts differently than we do our transaction accounts. If people have PayPal stored value on PayPal today, they think of that as different than their long-term savings with a money market mutual fund. The truth is the banking industry is still fighting the fight over money market mutual funds from the early 80s. Fidelity invented the product. They fought like mad against the product. They lost that war. Money markets are now offered by banks. I think likewise you're going to see yields on these stablecoin products or some return of value to the users of stablecoin products, and banks will be offering it. And I think you're going to see that in very short order post passage of the Clarity Act. So you're going to see a changed universe for banks, and that is just what the marketplace is demanding, what consumers are demanding, even though the banking lobbyists are raising their ugly heads this summer trying to say differently.
Well, I don't know if this is enough of a household issue that lawmakers running for re-election or for election can seize on the Clarity Act if they get this thing passed. But I'm curious about midterm messaging more broadly when it comes to the economy. Congressman, we heard from the president yesterday, well, by way of Kevin Hassett, who was talking to Larry Kudlow. This is far from a fully baked proposal, but they're talking about capital gains once again, indexing capital gains. You've heard this, you've seen this movie before. Taxes applied on gains adjusted for inflation. They're also talking about exempting taxes on sales of homes worth $2 million or less. Could they get that done in time to promote it on the trail, or this is for another day?
No, I think it's a popular issue, and I think it would be a reassuring push to the market. It would be a psychological improvement rather than a very quick economic improvement. But psychology is the big driver of inflation and affordability, which is a major issue for the voters right now. So anything the administration can do to shift the narrative is going to be a political improvement for Republicans at the midterm. Anything at all would be an improvement over what is currently the case across the country.
But what about the conversation we were just having around the debt and fiscal sustainability? Why look at something that could be revenue reducing?
Well, the marginal impact of these tax reductions, it's very small compared to the amount of overspending we have. We're paying now more on interest payments than we are on national security as a federal government. So these things are small things around the edges. They're not going to have a major fiscal impact over the medium term or long term. That's why they could be passed relatively easily on Capitol Hill, even with the fractious nature of the two parties and between and within those two parties on Capitol Hill.
Relatively easy. Everything is relative in Congress, as you know well. Mr. Chairman, thank you so much, as always, for joining us, the former chair of the House Financial Services Committee, former congressman from North Carolina, now Bloomberg politics contributor, Patrick McHenry. Of course, Congress is not here in Washington right now. They're all on August recess. Joe Matthews not here in Washington either. He's up in New York. I'm all alone in the studio.
Should have come
Joe,
up. You used to
you
work
at least
here.
have Charlie Pellet up there. I should have.
I know. We're having a good time.
Maybe next time.
Well, you know, I'll tell you what. If you want to work the weekend, I'll meet you Saturday morning. You can make it.
I'll leave that to Carol Masser.
Only on Bloomberg.
This is Bloomberg TV and radio.
Make sure to subscribe to the Balance of Power podcast on Apple, Spotify, and anywhere else you get your podcasts. We'll be there. Dial us up right now on YouTube. Listen anytime at our website, Bloomberg.com.
Tired of the same tedious traffic reports on AM radio?
Traffic every 10 minutes with Chip Rhodes.
Bob, we've got slowdowns on the Mass Pike and Storrow Drive.
Back to Chip. What's going on?
Still traffic on the Mass Pike and Storrow Drive, Bob. I told you 10 minutes ago there's traffic on the Mass Pike and Storrow Drive. Get a GPS.
Replace your old preset today with Bloomberg 92.9 and get news that matters.
The stories our listeners rely on.
Your new preset on the FM dial. Bloomberg 92.9. Faster, smarter, better.
Hi, how can I help?
Well, my husband and I feel like we've outgrown our current money manager.
I see.
Our lives have changed, and we need something more than just mutual funds to help us in retirement.
She's right.
I hear that often. At Fisher Investments, we'd start by getting to know you, your finances, family, health, lifestyle. We tailor a portfolio around your goals and needs.
Sounds good.
Can you help with estate planning?
Yes. We have a team of specialists who can help you with estate planning, Social Security, investment income, and more. We'll get to know your whole financial picture and help keep you on the path to a comfortable retirement.
And your fees?
We have a simple, transparent fee that's a percentage of the value of your portfolio. So we do better when you do better.
I feel better already.
At Fisher Investments, we're clearly different. Learn more at fisherinvestments.com/different. Investing in securities involves the risk of loss.
The competition in capital markets has a new center of gravity, Dallas. On October 27th, join Bloomberg Invest Dallas as we convene leading exchange operators, wealth managers, private market leaders, and policymakers to examine the trends transforming global finance. Learn from the people shaping what's next in investing, markets, and the economy. Bloomberg Invest Dallas, October 27th. Learn more at BloombergLive.com/InvestDallasRadio. That's BloombergLive.com/InvestDallasRadio.
You research your investments, you analyze markets, but have you researched your broker? For the past 3 years, Interactive Brokers' individual clients averaged a 24.3% annual return, beating the S&P 500. Lower costs, competitive rates, and access to 170-plus global markets help investors keep more of what they earn. The broker you choose matters. Interactive Brokers, member SIPC. Learn more at ibkr.com/performance.
Now, your 3-day weather forecast on Bloomberg 92.9.
Scattered showers and thunderstorms will be moving through, but they will taper off and end at some point this afternoon. A high of 80 to 85. It'll become clear tonight, 65 for the low. Sunny day tomorrow with highs of 80 to 85. More sunshine Saturday, highs are around 80. Sunday, sun, it fades as clouds increase in the afternoon, 80 to 85 on Sunday. I'm Rob Carolyn with your weekend forecast on Bloomberg 92.9.
The news doesn't stop on the weekends, and now neither do we. This is David Gura. Join us on Bloomberg This Weekend. Watch and listen to the new show Saturdays and Sundays starting at 7 a.m. on Bloomberg Radio, TV, and the Bloomberg Business app.
It's 121 on Wall Street. We do check markets all day long here at Bloomberg. Dow Industrials lower, but now little change, down under 0.1%. S&P pushing higher, close to a record, close once again to 7,800, up 47 now. That is a gain of 0.6%. We've got NASDAQ up 213 points, up 0.8%. The NASDAQ 100 index doing a little bit better, up by 1.3%. Again, the S&P at 77.96 right now, the old record 77.57. The 10-year right now 4.64%, with the 2-year currently yielding 4.14%. The 30-year 5.21%. Traders driving stocks and bond yields falling as more evidence of moderating inflation reinforces bets that the Fed is going to hold off on raising rates next month. We've got spot gold trading lower by $39 the ounce to $43.68, down 0.9%. West Texas Intermediate crude down 1.5%, just above 82 a barrel. Brent, the global benchmark, 87.84, down by 1.3%. But again, the 10-year on this PPI Thursday, 4.64%. S&P up by 0.6% at a record. SpaceX shares, yes, they are lower today, down by 3%, now at 141.77. But SpaceX continues to hold above last month's IPO price. It went public, you recall, last month at $135. SpaceX today at 141.81. Recapping, S&P trading at a record, up 0.6%. Joe and Kaylee, that is a Bloomberg Business Flash.
All right, Charlie Pellet live in New York. Great to be in the same room as Charlie as we hold forth from World Headquarters. Kaylee Lyons is live in Washington. And you remember the old line, it's the economy, stupid. That was what James Carville said, Kaylee, so many years ago. But I'm starting to wonder if it's been refined to, it's the data center, stupid. Because you're right, Kaylee, this has become one of the only bipartisan issues out there. Certainly the populist movement from both the Democratic and Republican sides of the aisle are seizing on the NIMBYism and the impact on energy prices, water resources that come with data centers that are, of course, exploding around the country. Fascinating. First reported by Punchbowl, Kaylee. Did you see this? Ad Impact reports candidates for House, Senate, and governor's races have aired nearly 4 dozen broadcast TV ads mentioning data centers this cycle. And the partisan split is pretty even here. The ads ran in 21 different races across 18 different states. One of them, Michigan, where you might remember the name William Lawrence. This is the co-founder of the Sunrise Movement, progressive Democrat, managed to win the race. This was 2 weeks ago now, against Representative Tom Barrett, a first-term Republican, by seizing on the issue of, yes, the data center, which he calls an existential threat. Here's a piece of his ad.
Congressman Tom Barrett wants to turn this field into a data center.
It's an existential threat.
He laughed when voting to give big tech billionaires the massive tax breaks to build it, while raising taxes for the rest of us. Nobody's laughing now.
Let's see if our panel is laughing at all at this issue and how prevalent it has become in this midterm cycle, as we bring in now Rick Davis and Jeannie Sheehan Zaino, both of them Bloomberg Politics contributors. Jeannie, a Democratic analyst and democracy visiting fellow at Harvard Kennedy Center's Ash Center, as well as Rick Davis, partner at Stone Court Capital and Republican strategist. Rick, as we listen to the words in that ad and the way in which Joe described this, is it used to be the economy stupid, maybe now it's the data center stupid. Is this not actually an economic issue? Ultimately, people are concerned that this is going to bring about higher utility costs, and they're concerned that it's big corporations and big infrastructure developers and AI developers that are reaping the economic reward.
Yeah, I don't think there's been an issue that has had the roller coaster effect that data centers have had. I mean, if you just go back a couple of 3 years, people were wildly in support of the data centers. One, they had the expectation of the great IT revolution that was going on with AI going to make life different for them, better. And they saw the enormous amounts of tax revenue. Certainly, I live in the state of Virginia. Virginia really was the leader of this movement in the entire country. And Glenn Youngkin, the governor at the time, said, hey, we're going to charge these guys to do this, and you're going to be able to have lower taxes because data centers are going to pay bigger taxes. And at the time, wildly popular. Over 60% of the people of Virginia supported that. Now, it's in reverse. Now it's only 30% of the people in Virginia support it because they're worried about the water. They're worried about the power bills going up. They're worried about other issues that are sort of NIMBY associated. Do you really want one of these things in your own backyard? And those are Republicans, Democrats, and independents. It's really not a hard partisan issue, but it is definitely a political issue.
It's a big one in some important states. Look at Sherrod Brown's ad. I'll require the data centers to pay the full cost of their electricity, not you. The Ohio former senator who wants to come back to the Senate. Jeannie, what do you think about this? How did it happen so quickly? Because Rick is right. 2 years ago, even 1 year ago, this was a pretty different conversation. Now that we're getting into this cycle, it has emerged as a preeminent issue here. Is that because people are actually seeing the impact in their bills, or they are afraid of what the impact could be?
You know, I think there's a lot of different factors. Data centers have become sort of a proxy for widespread anger about billionaires, particularly tech titans, telling us how we need to live our lives and what's going to happen in the future in issues as personal as our jobs and our employment to how much we pay for water and electricity. There's also the fact that if you look at the 5 biggest hyperscalers, that includes Amazon, that includes Google and Microsoft, they're on track to spend over $1 trillion on AI infrastructure from last year to this year. That's an astonishing increase. And of course, there's also other realities. One of the big early reports that came out in the New York Times was about the fact that in a lot of these buildings, and this one they focused on had to do in Louisiana for these data centers, have been done sort of in the middle of the night with NDAs signed with local officials without transparency that we're all due. And, you know, that case, that was, I think, Meta's $50 billion data center project in Louisiana. But there's been more of that around the country, robbing Americans of what we expect in a democracy, which is that our public officials are going to be transparent with us. They're going to tell us what deals they are striking and how these things will impact us. And, you know, we're talking a lot about how this is bipartisan. The concern is bipartisan, but what has not been is the response. Governor Hochul in New York led the way with this moratorium to widespread criticism. She was right on that. At the same time, Donald Trump signing an EO to build these things faster, and the Energy Department, rather, taking federal lands to build these things. So, you know, we've seen Governor Abbott try to square this circle by moving in the other direction in Texas, but this has become something more of a partisan issue. On the ground, it's widely unpopular, and yet the Republicans have found themselves with the support of tech on the wrong end of this issue, and that is a big problem for them that they're trying to unwind now.
Well, as Jeannie talks about Governor Hochul's implementation of a moratorium, Siena College put out just this week a poll about that. Overall, 52% of those surveyed agree with the moratorium. 61% of Democrats do, 51% of independents, 40% of Republicans. So this speaks to the bipartisan nature, by and large, of what you both have alluded to. So, Rick, it does raise the question, as Jeannie points out, that Kathy Hochul did this. You're seeing Greg Abbott with this pause until an audit is conducted in Texas. Those are current governors up for re-election. Yes. So they're having to make that calculus with that in mind. For anyone else in a gubernatorial race, they're all being asked to take positions on this. So if you were running those campaigns, what's the smart one?
Yeah, look, I don't think there's any question that the country's in a phase where you're going to tighten regulations around the new term that everyone's using is BYOP, bring your own power, right? That's the party I want to go to. So at the end of the day, there's going to be a change in how government regulation is applied to these, both at the local level, as Jeannie pointed out, at the state level, which we've been talking about, but also at the federal level. And because our grid is a national grid, our power generation is at state level. I mean, like if you decide at a local level to build give a permit to build a data center, where are you going to get the power from? You get it from the state. So all these things are interrelated. And when you have $1 trillion coming through a capital expenditure pipe that's wide open, it's going to land someplace. And so you're going to have some good actors and bad actors in this. But at the end of the day, regulation is catching up to industry, which is usually the way this works. And I would say we're better off as a country if we don't try to polarize this in the form of Republicans and Democrats. We want to be leaders in AI around the world. It is AI an existential effort. I don't want to have to be getting on a Chinese AI model in order to learn about what I need to know to get through the day. And so at the end of the day, I think it's a matter of education and regulation right now. And I think that's a lot of state governors are doing that.
Well, it's interesting to see some of the legislation. We talked to Byron Donalds, for instance, the Republican congressman from Florida who's running for governor and has made this a big part of his campaign to create essentially a closed circuit, Jeannie. If you want to build a new data center, and by the way, this is why Elon's talking about putting them in space, because this is complicated. How do you cool them? How do you power them? And how do you keep them away from people's houses? Is the beginning of this closed circuit, like Rick said, bring your own power. You also need to have a cooling system that does not draw from municipal water, that might include a different type of technology. Does that create a more palatable scenario for voters from both parties?
It does to a certain extent, but it also raises enormous additional challenges. You know, the closed circuit is an interesting one because there are many scientists who say that, in fact, to get that to operate and the chemicals that it uses requires even more energy and more water and more electricity. There are challenges as Elon Musk thinks about putting these data centers in space. You know, and so this is where I think we come down to the crux of this, is that we do need a pause. We do need some kind of timeout where we think about what the impact of all of this is on our lives and our communities. You know, somebody talked about the fact that our infrastructure as it exists now is so antiquated. We are right now, as I mentioned, over $1 trillion building an entire infrastructure for one industry. What happens when Elon Musk innovates, puts these things in space, and we are left with trillions of dollars worth of this infrastructure on Earth? Who pays for that, right? These are all these questions that need to be asked. And you know what? When we say no to these big corporations, they will innovate and find another way. And that's why I think even with the tax incentives and bring your own water and all of these things, you have a lot of people out there who are wary and saying, no, we need a pause on this one. And we need the federal government, because to Rick's point, these are in many cases federal and local state issues, to step in. And there are a lot of states, but we need the federal government to step in as well.
Boy, just imagine if this has become the issue it has now, what this is going to be in 2028 with that many more billions of dollars invested into all of this. This is a great conversation and one you're not going to hear or see anywhere else. And big thanks to Rick Davis and Jeannie Shanzano for helping us explore this. Bloomberg Politics contributors. I'm Joe Matthew in New York at World Headquarters alongside Kaylee Lyons in Washington. We'll get an update for you on the markets coming up. We'll spend some time with Christina Kino, our managing editor for Markets Live, as we see a new record high for the S&P 500. We'll look under the hood right here on Bloomberg.
Speed, analysis, context. This is Boston's best source for news on the FM dial. Bloomberg 92.9. Coming up, the latest market-moving headlines from Bloomberg. First, an update from our partners at ABC News.
ABC News, I'm Michelle Franzen. In Texas, military and civilian investigators are on the scene near Fort Hood following yesterday's deadly helicopter crash. Here's ABC's Jim Ryan.
The Apache attack helicopter was carrying 2 soldiers, both of whom were killed when the aircraft went down southeast of Fort Hood, where the Apache and the crew were based. It also sparked a wildfire that forced the evacuation of several homes and has burned about 155 acres of pasture and brushland.
In Colombia, search and rescue efforts continue for signs signs of life following Monday's powerful earthquake. Officials say 273 people are dead and more than 370 others are reported missing. In Massachusetts, the trial continues for Lindsay Clancy, the mother charged with killing her 3 children. Defense attorneys argue Clancy suffered from postpartum psychosis and did not receive adequate medical care. And in California, a 3.8 magnitude quake struck in San Francisco's East Bay this morning, rattling residents. But there's no reports of damage. This is ABC News.
Why wait through boring and irrelevant topics on AM radio when you can listen to Bloomberg 92.9 FM for stories that matter? Breaking global news and the context you need. Bloomberg 92.9. Faster, smarter, better.
A new chapter in global growth is being written, and much of it is happening in Africa.
Africans need to invest.
There are deals to be done and business to be won.
I'm Jennifer Zabasaja. Every week on the Next Africa podcast, we track capital flows and political shifts shaping the continent's future.
The digitalization of Africa is going to power its growth.
Ridding the world of something like HIV is possible.
Population growth is so enormous in Africa.
Listen to Next Africa on Apple, Spotify, or wherever you get your podcasts.
This is the story of the one who keeps multiple buildings running smoothly day after day. Plumbing that flows, HVAC that hums, cleaning supplies that keep surfaces sparkling. That's why she counts on Grainger. With easy reordering online and 24/7 support, Grainger helps her keep the products she needs on hand. So shelves stay stocked and buildings stay ready. Call 1-800-GRAINGER, click Grainger.com, or just stop by. Grainger, for the ones who get it done.
Our hometown is not a test tube.
90 miles northeast of Nashville, a battle for the future of America plays out in one small town.
Developers with right-wing ties have purchased hundreds of acres of land.
We need cities on a shining hill.
This is Our Town, a podcast about what happens when a small town becomes the site of a social experiment and fights back.
Guess you didn't move in on a bunch of dumb hillbillies now, did you?
Download the free iHeartRadio app, search Our Town, and start listening today.
Bloomberg Radio, on demand and in your podcast feed.
On the latest edition of the Bloomberg Intelligence Podcast, a conversation with Woo Jin Ho, Bloomberg Intelligence Senior Hardware and Networking Analyst on Cisco earnings.
Quite frankly, to put it in a nutshell, sales are white hot, right? AI close to doubling in fiscal 2027 based on their guidance, and then their core networking business, which is the basic stuff that connects all of our computers, that's going to grow at a fair double-digit pace as well. So from a demand standpoint, it's great.
So were investors' hopes just too high, or maybe was Cisco just too conservative? I mean, what's your take?
From a revenue standpoint, I don't think it was too high, Lisa. Quite frankly, I'm pretty pleased with the results because, like, we all knew that AI was going to be strong, and then the core networking continues to outperform. But that's the issue right there, right? You have a higher hardware mix, and hardware in the face of a memory inflation is going to put a drag on gross margins. The head fake here was that the fourth quarter gross margins was at 66%, first quarter guidance was at 66%. And all of a sudden, it looks like it's going to be closer to 64 to 65% in quarters 2 to quarters 4. But at the end of the day, I think it's going to be a temporary impact, and gross margins should start to improve if we look past 27.
So what are the pressures on the gross margin here? Where's that coming from? The cost side?
Future cost increases are going to keep pace with the memory increases, right? That's one. And number two, at the end of the day, they're selling a boatload of hardware. And we all know that hardware margins aren't as good as software margins.
Hear the full conversation on the latest edition of the Bloomberg Intelligence Podcast. Subscribe on Apple, Spotify, and anywhere else you get your podcasts. Plus, listen anytime on the Bloomberg Business app and Bloomberg.com.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. The U.S. government has sold 30-year bonds at the highest rate in a quarter of a century, reflecting a relentless sell-off that has stirred speculation the nation will tilt borrowing further towards short-dated maturities. The yield at the $25 billion sale came in at 5.216%. That is the most since 2001. Traders driving stocks higher. Bond yields fell as more evidence of moderating inflation in the form of the PPI report this morning reinforced bets that the Fed is going to hold off on raising rates next month. Right now, we've got stocks pushing higher. In fact, the S&P 500 index is at a record 77.91, was trading above 7,800, up 42 now, up by about 0.5%. Any close above 77.57 will be another record on the S&P. The Dow, as I mentioned, lower now by 0.1%. NASDAQ up 205. That is a gain of 0.8%. NASDAQ 100 index doing a little bit better, up by 1.3%. All of this with the stocks, the Philadelphia Stock Exchange Semiconductor Index, surging by another 2.2%. The 2-year, 4.14%. The 10-year, 4.64%. And the 30-year, 5.21%. Gold down 1.1%, 43.61 the ounce, and West Texas Intermediate crude down 1.6%, 81.97 a barrel. Oil shares, meanwhile, trading mixed. ExxonMobil among the super majors down 0.5%. Chevron, though, up 0.5%. ConocoPhillips down by 2%. I'm Charlie Pellet. Joe and Kaylee, that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. It's been fun to do this today in the same room as Charlie Pellet, and he will continue with another update in just about 20 minutes' time, 2 p.m. Eastern, as we kick off Bloomberg Business Week Daily. It's an opportunity, though, to not only check the headlines, but look under the hood a bit in this market and get a sense of what is driving decisions right now. And happy to say Christine Aquino is with me at World Headquarters in New York. We'll note that Kaylee Lyons is in Washington, D.C., holding forth as always. Christine, our managing editor for the Markets Live blog, it's wonderful to see you, as always. We're at another record high. We could be at 8,000, depending on how the next couple days go imminently here, despite the incredible uncertainty geopolitically and what was a BAFO earnings reporting season. We're being pulled in multiple directions here, Christine. How does it shake out for the next couple of weeks?
I mean, honestly, Joe, at the moment, it's making for an everything rally. Everything's rallying. Yeah. I mean, primarily stocks and bonds, as you mentioned, S&P 500, another intraday record high, set for another record close. But at the same time, we're seeing the bond market rallying as well, even though, we did just get that auction result in the 30-year yield. It's the highest yield since 2001. But investors tend to like that when a borrower is paying up for the debt, and that includes the U.S. government. Yep. So, seems like everything's fine if you're just looking at the markets.
Okay, we'll take it in a vacuum, Kaylee.
Well, is everything fine? Because we also had cooler inflation data, and the market is thinking that maybe borrowing costs aren't going to be moving higher this year, Christine?
Yeah, that's definitely part of the story, Kaylee. I mean, the pair of CPI, PPI reports that we got over the last couple of days really goes a long way in easing some of those inflation concerns that have been plaguing the markets for some time now, and especially since the Federal Reserve itself called attention to the pressure from inflation since Chairman Kevin Warsh took the helm at the Fed. But, these pair of reports that we've seen alleviate some of those concerns. We have definitely seen some of those expectations for rate hikes, particularly in September, fade away. And now looks like traders aren't looking at a possibility of rate hike up until December, when, just last week they were saying that, hey, the September Fed meeting could be live, but that doesn't seem to be the case now.
Are we in a world then, we could throw any number of headlines at you, Christine, where the stock market is essentially dependent upon the bond market for day-to-day direction?
I mean, it's interesting, though, Joe, because in some ways, yes, and in some ways, no. The stock market, of course, has its own very compelling catalyst, which is the AI trade that seems to keep on going. I mean, we heard from companies at the most recent earnings season. Everyone's upgrading their forecast. Everyone is upgrading their guidance. Seems like that trade is still roaring on. And so that's an independent catalyst for equities. And then, of course, you add in the fact that inflation pressures are easing. The job market is holding on. I mean, that's basically a Goldilocks environment that stocks, it's another reason for stocks to rally on top of what we're seeing on the AI side of things.
Well, inflation is easing because energy prices fell in the month of July for the most part, and then they rose again as we saw an escalation in conflict in the Middle East. Christine, when we consider how the Middle East and how the trajectory of oil prices is factoring into this market as a whole, what's the correlation?
I mean, very good question, Kaylee. The correlation has actually been fading a little bit over the last few months. I mean, we saw that kind of peaking around May of this year. That was really when oil prices was the main catalyst that's driving stocks, driving bonds, driving the dollar. And since then, we've really seen that correlation weaken. And, that speaks to a lot of things. Primarily, I think the sense of fatigue that traders feel when they're grappling day in, day out with so many headlines, a lot of them very confusing, very contradictory, and not necessarily giving a clear, longer-term picture of what's going on in the Strait of Hormuz, what's going on in U.S.-Iran tensions, or their relations actually easing a little bit. I mean, it seems like the story is changing day to day. And so if you're a trader worth your salt, you're probably not necessarily going to be changing your positions just because we got one headline saying, because it could be saying another just hours later.
All right, Christina Kino, managing editor for the Markets Live blog here at Bloomberg. Thank you so much, as always, for joining us. And as we consider the trajectory of oil prices specifically, we want to bring in now Rebecca Babin, CIBC Private Wealth Senior Energy Trader, who's back with us on Balance of Power. Rebecca, always good to have you on the program. It's interesting to look at a chart of oil right now, because with the exception of that spike we saw once again in mid-late July with the escalation of attacks, the U.S. resuming strikes against Iran, we've been pretty range-bound in this $80 to $90 range. Is there anything that materially can break us out of that, or is this the new status quo for the foreseeable future?
So I think there's a couple of things that break us out of that. I think the first is if we see the flows that have been transiting Hormuz, and that number is widely debated, but significantly higher than what analysts originally penciled in. So if we're looking at 7 million barrels flowing through the Strait, which is kind of between the low and the high end of, 5 million barrels on the low end and Chris Wright's 9 million barrels, if we start to see that number materially decline below 5 million barrels a day due to increased kinetic military action, that will break us out of the range. The second thing that will break us out of the range is if the Red Sea becomes more of a target by the Houthis. Right now, Saudi Arabia is avoiding the Bab el-Mandeb, transiting north through the Suez. If we start to see the workaround to the workaround be impacted, that will break us out of the range. And the last thing is if we see China materially increase their imports from around 7 million barrels a day back up to 11 million barrels a day in coming months, that will break us out of the range, assuming that flows have not fully resumed. So I think those are the keys that break us out to the upside. To the downside, what breaks us out of the range is clearly normalization of flows through Hormuz at the same time that we have non-OPEC supplies increasing.
Mm-hmm. Okay, Rebecca, so that's what we should be looking out for. But what's driving decisions today? You've got WTI and Brent both down about 1.5%. Who's selling oil today and why?
So I see this as maybe a little bit of profit taking. If you look on the week, we're up 4%. Mm-hmm. And what I see more than the selling is just a lack of conviction of buying. It's a buyer strike. There is just no threshold for pain to own crude into a weekend where you could get rhetoric around a peace deal, or that more flows that we thought were going through the Strait are moving through. So I actually think the threshold for where buyers step in is just so much lower than where we're at right now. It's kind of in that low 70s range where there's some conviction. And for now, the traders are really letting, the profit taking and the downside expressions through puts kind of drive the trade action. So I don't see this as panic selling or aggressively putting on short positions. I see this as more, I'm not willing to step in at this point. I want to see more concrete information. I want to see the China data really, if I'm looking at fundamentals, improve before I start getting really comfortable buying crude at these prices.
Mm-hmm.
Well, so you're looking at China data, I'm assuming in terms of demand, Rebecca. You also raised China in terms of one of those potential breakout scenarios. If you start to see them coming back as a material buyer in a limited supply scenario, is the entire trajectory of the oil market by and large now dependent on China?
It's not entirely dependent on China, but they are the largest importer of crude, and they have been one of the most significant buffers to this event over the past months. So are they the key to this puzzle? They kind of are in the short term. Now, over the long term, there's so many more factors that we need to look at. But over the very near term, what China does really does tip this supply and demand kind of scarcity surplus story on its face. So that, for me, that really is the key over the coming months, in addition to obviously flows moving through the strait. But China has really been incremental in keeping prices from moving above this $100 a barrel range. They've drawn stockpiles, they've shifted away from crude, gone to coal, they've reduced their exports of products. They did reverse that, and we are starting to see China export some products now, which when we look at how tight the product market is really critical. So yes, to give you a short answer, I think in the short term, China is the most important factor.
Interesting. When we consider the refining bottleneck, we add another layer here, Rebecca. We're at $4.07 nationally for gasoline today. It's $5.40 for diesel. And you have pointed out that refiners have been pushing back maintenance for some time now. And at a certain point, they won't be able to do that anymore. When you consider crack spreads and where gas and other distillates are going, how worried are you about refinery outages?
I'm pretty worried. I mean, we're running at 96% refinery utilization at this point. Almost every refiner has pushed back maintenance to capture the crack spreads that are extremely elevated. You can't do that continually. There will be something that breaks, and that will cause an outage that lasts longer than potentially maintenance would. So that to me is a huge risk. We've already lost 20% plus of refining capacity through the Middle East and Russia, and China reducing their runs, right? We don't have anything left in the system if something surprise happens. We saw Libya lose a little refining capacity earlier this week. There's no buffer here. So I do worry about this maintenance season. If refiners do go in maintenance, keep in mind that keeps the product market tight, right? Yeah. We're losing that ability to bring product to market, and actually weighs on crude. But that's a better solution than creating a system flaw or a fire that keeps things offline for longer than the maintenance period. I
or
tend
God
to
forbid
think
we have a hurricane.
Start to see maintenance now. Did I lose you?
God forbid we have a hurricane. I mean, that would be a game changer, no?
That would be a game changer. I mean, it is an El Nino year, and it's predicted to be less of a factor this year. But listen, you just never know. So yes, another huge risk on the horizon.
Okay, so can we look out 82 days on the horizon, specifically as we approach Election Day? Do you have a best guess of where retail gasoline and diesel prices will be early November?
I don't have a best guess, but I don't think it's going to be as low as the administration would want it to be. So I guess I would say it's going to be higher than the pain threshold for many in the administration, and probably not as high as the extreme scenarios that people are talking about. So if I had to put a range on it, I would kind of put it in the $4 to $4.25, $4.30 range of where we see gasoline prices. And I think diesel, a little bit more of a wild card, remains above $5. Maybe we see $5.56 in a bad scenario. So I think that's what the range is. It's not significantly lower than where we are today.
Interesting. Just lastly, Rebecca, we're back to this reluctance to go long into the weekend. That continues until there's a breakthrough. We've got about 30 seconds.
So I think it does continue. I mean, if you just look at how traders have been nicked up this year with headline risk, and it's the middle of August, the threshold for pain is low. And I think that buyers are going to say, you know what? I'm willing to miss this 5% move higher because I do not want to lose 10% to the downside.
Yeah. It's great to have you back with us. Rebecca Babin, CIBC Private Wealth Senior Energy Trader, taking us right into the pits for a trader's view. Kaylee, this is something that's not likely to change anytime soon. We've got a report today that another aircraft carrier is still on the way to the region to relieve the Lincoln, and we're girding for the long term.
Yep, and we're going to talk about that story and others when the former defense secretary in the first Trump administration, Mark Esper, joins us in the late edition of Balance of Power. We'll have more important conversations that hour as well, including with the congresswoman, or the would-be congresswoman running against Mike Lawler in New York. Kate Conley will join us. So I'll see you then, Joe, at 5 p.m. Eastern, right here on Bloomberg TV and radio.
In the meantime, make sure to subscribe to the Balance of Power podcast on Apple, Spotify, wherever you get your podcasts. Pretty simple. And listen anytime at our website. It's Bloomberg.com.
Now, your 3-day weather forecast on Bloomberg 92.9.
Showers, thunderstorms tapering off and ending at some point this afternoon. High of 80 to 85, becoming clear, low of 65 in Boston tonight. It's closer to 60 in the suburbs. We'll have sunshine and lower humidity tomorrow. High of 80 to 85. Sunny Saturday with highs approaching 80. Sunday, sun will give way to clouds and highs will reach 80 to 85. I'm Rob Carrollton with your weekend forecast on Bloomberg 92.9.
Bloomberg This Weekend. News, politics, and the lighter side of Bloomberg.
Developers in South Korea, they created dopamine websites. So they basically simulate online shopping.
What?
Without the cost.
The food one cracks me up.
Yeah, so you can buy items, but they're never going to arrive.
Buy items?
Yeah, it wants you to feel good.
You just want to fill that card.
Yeah, fill the card. It makes you feel good.
Does it?
Bloomberg This Weekend. Saturdays and Sundays on Bloomberg 92.9, Bloomberg Television, and the Bloomberg Business app.
Is life insurance still on your list from earlier this year? Now is the perfect time to just get it done. A buddy told me that securing life insurance sooner rather than later can help you lock in lower rates for years to come. So I added this to my list this year and got it done. I called SelectQuote and was shocked at how easy and affordable life insurance is. I'm 40 and got a $500,000 policy for $18 a month. My wife's also 40 and her $5,000 policy was only $16 a month. Plus, with SelectQuote's same-day coverage, no medical exam was required, and we were covered by the time we hung up. Checking this off my list felt great, but the peace of mind knowing my family is protected feels even better.
Call SelectQuote at 1-800-280-5858 for your free quote today. That's 1-800-280-5858. Or go to SelectQuote.com. That's 1-800-280-5858. Details on example rate at SelectQuote.com.
I'm not one to say I told you so, but I switched to Pure Talk over a year ago, and ever since, I've been telling people there's no better wireless company out there. Well, a few months ago, a massive survey was conducted. 123,000 people were asked to rate their wireless carrier in 4 categories: coverage, support, data, and overall value. Well, the results are in. Guess which wireless company was the only wireless company to get 5 stars in every category? Yeah, Pure Talk. 5 stars, every category. To celebrate, Pure Talk is offering the first 3 months of any plan for just $15 a month, including their top-tier unlimited plan. No contract, no commitment, just a very inexpensive way to test drive the only American wireless company with 5 stars in every category. Just dial pound 250, say micro, and Pure Talk's U.S. customer service will take it from there. Again, pound 250 micro. And yes, I told you so.
I'm Lisa Mateo, inviting you to join us for Bloomberg This Weekend. Catch the show Saturdays and Sundays starting at 7 a.m. Make Bloomberg #1 on your weekend to-do list. Watch and listen on Bloomberg Radio, TV, and the Bloomberg Business app.
This is WBOS HD1, Brookline, Boston.
WNBP, Newburyport.
Bloomberg 92.9.
Programming paid for by Bloomberg.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, and Bloomberg Originals.
And a very good afternoon, everybody, across Bloomberg platforms. Welcome to Bloomberg Business Week Daily. It is Thursday, August 13th. Not quite a Friday the 13th. It's a Thursday the 13th.
It kind of feels like Friday the 13th, I'll be honest.
All right, yoga breath for everybody.
All right, here we go. We got this.
It's been one of those days for us. Welcome, Mel. We're delighted to have you with us. Everything is awesome.
Yeah.
How can you be upset?
I don't know if you're long this market. Yeah, you're pretty happy looking at potentially a record close for the S&P 500.
Yeah.
Charlie Pellet's going to have some details, but we got the vast majority of stocks, and they're basically a 3-to-1 ratio moving higher. The S&P up right now, 0.5 percentage point.
Yeah.
Okay. Month to date so far up 4%.
Yeah, not too shabby, right? If you are a bull. A lot of the enthusiasm, we got another inflation print, and once again, you've got investors, kind of saying, all right, moderating inflation perhaps, so maybe the Fed doesn't have to do anything and certainly refrain from raising interest rates when it meets next month. What?
There's a lot of economic data that we get between now and then.
I know. I'm just telling you what people are thinking.
Okay.
All right, so maybe the Fed's saying, not now when it comes to raising rates next month, but as Tim mentions, a lot can happen between now and then. Ahead this hour, speaking of the trade, we're going to get into that latest Treasury auction, 30-year.
Yeah, that auction drawing its highest yield going all the way back to 2001. Ira Jersey's stopping by. What it all means for us and, of course, for you.
Yeah, exactly. Also on the trade, up, and away, and why the broad equity backdrop is increasingly supportive of the near and long-term upside. We have UBS's alignment partners, Allie McCartney, back in-house with us. Can't wait to talk with her.
Well, is she in the house with us?
Oh, well, she's kind of
I'm giving Allie a hard time because
she's kind of where Tim needs to be and where I want to be.
She doesn't really come to New York City in the summer. Let's just say that.
And
it's pretty great.
When you hear I totally get it. Hey, we can't get enough of the race for critical minerals. You guys did a deep dive earlier in the week on this.
Yeah, Libby Sternheim is going to be joining us, Really's CEO. Earlier this week, we did speak to Gary Evans over at U.S. Antimony. That was just ahead of their earnings conversation. But we're looking forward to having Libby stop by a little later.
Yeah, exactly. What's the update? Especially since President Trump talking about U.S. investments last week, a big to-do. So see whether or not he's feeling some changes. And then we've got a Bloomberg Markets Magazine feature on how AI looms over software companies. We've talked about that a lot. And the investors who piled into them. A deep dive. It's the money issue for Bloomberg Markets Magazine. So we're going to get into that a little bit later on.
And speaking of later on, I do want to just give a shout to our 4 p.m. hour. We're doing a special. Daron Acemoglu is going to be joining us. He's the recipient of the Nobel Prize in Economic Sciences. He's got a new book out. Carol just held it up.
I'm obsessed. We are obsessed, actually. Our whole team has been talking about this for a while. And
yeah, and we want you to be part of the conversation. So if you want to submit some questions for Daron, just go to Bloomberg.com/AskRadio. That's Bloomberg.com/AskRadio. It's exclusive to Bloomberg.com subscribers and subscribers of the Bloomberg Terminal. We've been getting some great questions for our guests.
Yeah.
Keep them coming, everyone.
And you can ask us questions about any of our guest segments. So bring it on, bring it on. Hey, first up, though, let's bring it on when it comes to the markets and see what's going on in some of your top business stories. Over to Charlie Pellet.
All right. Hi, thank you very much. And here's what's going on. Got to begin with the sale of 30-year debt. Government sold 30-year bonds at a 5.216% rate. That is the highest since 2001. It does reflect a relentless sell-off in the market. S&P today pushing higher, 77.90, looking at a record there. Indeed, earlier today we were trading above 7,800 on the S&P, up 42 right now, up 0.5%. Needless to say, it is a record. And remember the number 77.57. Any close above that will be a new high on the S&P. So to be sure, 77.91 where we stand right now. The Dow lower, little change, down 9 points right now. That is a drop of under 0.1%. NASDAQ up 0.7%. The NASDAQ 100 index up 1.2%. All of this is Cisco and Cerebras Systems sell off. Cisco, by the way, down 8.9%. Cerebras right now down 13%. Even so, NASDAQ 100 holding on to a gain of 1.2%. The 2-year 4.14%. The 10-year 4.64%, and the 30-year 5.21%. Gold at $43.58 the ounce. Spot gold down 1.1%. West Texas Intermediate crude $81.48 a barrel, down 2.1%. Brent crude right now $87.17 for Brent. That is a drop of 2%. Among the oil super majors today, ExxonMobil down 0.6%. We've got Chevron right now. Chevron shares up 0.5%. ConocoPhillips lower now by 2.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. Carol and Tim, That's a Bloomberg Business Flash.
It is indeed. All right, Charlie Pellet, thank you. Charlie mentioned this, and let's go back to it. The U.S. government selling $25 billion worth of 30-year bonds today. It was just about an hour ago. We found out how the auction went. Draw. That's what my New Jersey. My husband always says it. You sound like you're from New Jersey. I'm proud of it, but draw.
You spent a couple of years outside of New Jersey in your life.
In New York.
Yeah, 4 years.
That can be so complimentary to a New Jersey accent. All right, the auction drew its highest yield since 2001, 5.216% versus a 2.12% when issued yield at the 1 p.m. New York time bidding deadline. So that was seen as a sign that demand fell slightly short, Tim, of expectations.
I'm curious what Ira Jersey has to say about this. He's Bloomberg Intelligence Chief U.S. Interest Rate Strategist. He joins us from our Bloomberg News Bureau in Princeton, New Jersey. Ira, let's start with the auction and what investors ended up paying for it. Your view and your takeaway from this.
Well, the auction was kind of meh, quite frankly. It's a small tail, so just a little tiny bit higher yield than what was expected right at 1 o'clock when the auction closed. But the bidding metrics were completely average of the last year's worth of refunding auctions. So, not a big surprise. I think dealers and other investors were set up for this. That's why you saw a little bit of yield curve steepening between the 10-year and the 30-year yesterday, where 30-year yields were a little bit higher than 10-year yields day on day, and I think that so it wasn't a big surprise either way. Actually, this week's auctions, all three of them were actually quite average, and I think that just shows that people aren't balking at buying debt, even though we continue to have deficits at 6% of GDP.
So sometimes if someone says, "Well, you're kind of average," it's not a great compliment, but in this case, being quite average is a good thing.
Yeah, and the trend for the Treasury auctions recently has actually been pretty good. We've had basically 1 month where we had pretty bad auctions, and that was back in March at the beginning of the war. Since then the primary market has been reasonably decent. Now, part of it is now that we're above 5% in 30-year yields, the highest yields in the last 25 years. You're I think attracting some liability-driven investors. So these are pension funds and insurance companies that really like a 5% book yield. They buy treasuries, it's very liquid. Instead of going out and buying, say 30-year corporate bonds, which maybe they can't buy in enough size, or with spreads as tight as they are, they just don't find them overly attractive. So they're coming into buying treasuries. And obviously we got here, so that means that there were some people who didn't want to buy before we got here. But now that we're here, I suspect that we found an equilibrium, and now the question is, what causes us, say, for yields to go back down to 475? I'm not sure it's there, and part of that's because yields in the long end around the world are starting to go up pretty dramatically.
What happens? I mean, how much higher could it go for the 30-year, at least in the U.S.?
Yeah. Well, I think that we're probably going to hover kind of here to 475 over the next 6 months. Could we go to 5.5%? It's completely possible, and there's a plausible way to get there. I don't think we will, in part because I think that real yields, and obviously I'm talking about the yield on 30-year tips, being at 3%, it doesn't seem to want to break above that. So unless we wind up getting a significant increase in long-term inflation expectations, which also I don't expect, and I don't see why that would occur at this point in time. I think we're probably pretty close to the high. Well, can we get to 525 or 530? Maybe, but I do suspect that we've seen or just retesting kind of the cycle highs for this economic cycle.
Bit of a bummer though for the U.S. government, who's got to pay the debt, right? Higher rates.
Yeah, so it's higher rates, but remember, it's $25 billion of 30-year.
Yeah,
so, okay, that's not great, right? But at the same time, it's really what's going to hurt them a lot more are what's going on with T-bills and 2-year yields, right? 2-year yields back at 4.15%, 4.2%. There's a lot more of that outstanding, right? So that 50 basis point sell-off is actually going to increase the cost to the government more than what they're doing in the long end. That almost is an also-ran compared compared to T-bills, 2-year notes, 3-year notes.
This is why we talk to you, because you know this stuff inside and out. Ira, thank you. Really appreciate it. He is, of course, Ira Jersey. He is Bloomberg Intelligence Chief U.S. Interest Rate Strategist, joining us from our BI headquarters out there in Princeton. All right, that is the U.S. rate picture. Now let's get to the U.S. markets and really kind of the investment landscape.
Let's get to Allie McCartney. She's Managing Director for Wealth Management and Private Wealth Advisor at Alignment Partners at UBS, which has just over $1 billion in assets under management as of mid-year. She's out on Long Island this afternoon. She's not here in our Bloomberg Business Week studio.
We want to see the coast. I'm just going to tell you, I want to see the beach, and I'm really jealous because I'd love to be there.
You can just walk right over to the river, Carol, and you can take a look. Allie, first up, how much do you watch the U.S. bond market, the auction, the concerns about rising deficits, as Carol was just mentioning?
We always watch the bond market. The relationship between the interest rate market, the bond market, and equities is a historical and very strong market relationship. However, because of the next question you're going to ask me, when you are in a market where you have falling inflation to potentially disinflation, where you have a labor market that is also stoking probably a decrease in the likelihood that interest rates go up this year, and when you have an earnings picture which is extraordinary, not only in the US, but globally, let's just say especially in mid-August, less fervent than I watch other things right now.
So can I ask you about earnings growth? We had a great story, Allie, on the Bloomberg that we've been talking a lot about this week. Earnings growth has been too strong, with profit growth running at more than 30% in the second quarter. This pace is unlikely to last, and the consensus expects growth to fall below 20% in the first quarter of 2027 and moderate into the mid-teens for the full year, which could place next year's stock market in a weaker phase. Again, this is our story. The thing that I want to get to is historically, when earnings per share growth is above trend but decelerating, the S&P's median 12-month return is 6.7% compared to a median 14% return when EPS growth is above trend and accelerating. Now, mind you, every cycle is a little bit different.
So every cycle is a little bit different, and depending on which data and sort of historical allegory you pick, you get different numbers. I like to look at it very differently, which is we have an absolutely secular bull market, which the average bull market since World War II has lasted 7 years. I think this one can probably 4 years in last a lot longer, given what we have in AI, reshoring, tariffs, et cetera. But what I believe, and what we believe at UBS, is that yes, are we going to continue to have the kind of EPS and profit growth that we've had? No. Can we still see 25 to 30% this year, 20% next year, teens or high single digits the following? Yes. I would liken it to what we've seen with the top 10 tech titans, where last year, we've come down significantly. Can it stay at 150%? No, it's down to 50% from 10 stocks contributing both growth and market capitalization. But does that mean that earnings aren't going up more than average? And does that mean that there's still room also to grow into those earnings and grow into additional multiples because of productivity gains? I do believe so. But I understand that the more highs incrementally we reach, the more bulls we see.
Yeah. So but the question is that I guess I have is what flips that for you? What's sort of out there right now and makes you think, okay, maybe we don't get a great print from NVIDIA and that sends some sort of signal. I don't know. Like what are you watching?
So for me, the risks that we have to the downside and sort of to the global economy and both to social infrastructure and politics are not really the macro right now. And they're not even really the micro. It's more sort of the esoteric or the sort of Six Sigma kind of stuff, right? It's geopolitics. It's another pandemic. I think that, when you talk about what the real risks are and what is giving volatility into this market, although we've seen very little outside of those top 10 stocks, I think we're talking about some of the AI stories that we've heard a lot about, looking at the circularity, of the infrastructure, of the build, of the relationships of the ecosystem. We're talking about what it looks like when you take sort of the moated, defensive, largest cap companies of this country and economy